Thank you, everyone. I have about 45 minutes. Thank you so much, Anna, for inviting me here today. And thank you, Traders Expo, for having me here with the presentation. We definitely have a great lineup. Wow. So very honored to be part of such great traders that are invited here today. So in today's presentation, I will talk about earnings season and how you can exploit earnings season just by trading four charts, basically, and that is trading earnings season through futures, because we all know that not all of us probably have the capital to trade Google or to trade Amazon, but there is a less expensive way to do that and a less riskier way in which we can capitalize on the market moves in earnings season from the big market players. All right, so before we begin, I would like to draw attention to our risk disclaimer. All information that we are providing is for educational purpose only, should not be construed as investment advice regarding the purchase or sale of securities, options, futures, forex, or any instrument of any kind. For those of you that do not know me, my name is Anka Metcalf, and I'm the CEO and founder of TradeOutloud.com, which is a trading education company that is specialized in educating individuals how to day trade and swing trade the futures and the equities market. I do provide the education, I'm the instructor, and I also trade alongside with my traders just to reinforce what we teach in our classes. I have been doing this independently for about 18 years, and prior to becoming a professional independent trader, I come with 10 plus years in investment banking. I'm also the designer of an institutional proprietary trading system. And the reason why I'm the designer is because I cannot take credit for technical analysis that has been here for decades. But I have adapted an institutional module for the retail trader. So I wanted to bring the institutional concept and the institutional way of trading to the retail trader. And therefore, we have a unique method in addressing the markets. We focus on price support resistance, but there's a catch. We focus basically on 8 to 10 layers of price support resistance because we want to make sure that we capture the maximum foundation for a move on the pullback in an ongoing trend. And we want to make sure that that specific location is prone for a rotation in that area. So therefore, we're looking at confluence areas. So we're looking not only on a level of support to hold, we're looking at multiple levels of support to glide into the same area. So when the price comes in, it'll have a really good reaction, and therefore it will enable us to predict future price movements based on these levels. I also have developed specific trigger times because I have been trading for a very long time as an independent trader. For the last 18 years, I have dove into day trading because I have been always swing trading and investing. So I have been on the longer term side. But when I quit my job, I really wanted to make money day trading because that is the income style of trading. Day trading is an income producing style of trading because you're in and out within the same day. So you can literally, if you made profits at the end of the month, you can pull the profits out, you could pay your bills, you can pay your mortgage, you can pay anything with it. But in swing trading, if you have your capital tied up to one name, then you cannot exit the position. So you're pretty much stuck into the position until the trade is trailed out and you have access to your capital back again. So I have developed these trigger times that trigger in the morning. So for trading for so many years, I have noticed that throughout the time, there are some times in the market where the price tends to come in, rotate, and then trigger for higher. Before, I would take a trade and I would have like a perfect setup. I would take the trade and then the trade would trigger. I would be in the trade and it would go just very little to the upside if it was a long. And then guess what? It would come and take me out. So it would stop out. And that is because I was not within the rhythm of the market. The other thing that I pay attention to is specific price zones. And these are institutional levels where you have a plethora of algorithms, you have institutions that are beginning positions. There are 4 price points throughout every single chart that provides clues as to where the institutions are legging in and also scaling out. And also focus on chart synchronicity and divergency. And chart synchronicity and divergency is very important because, for example, even for example, on a day like today, where we have all the, for example, all the indices that are higher, all the market ETFs, major market ETFs like the SPYs, the Qs, the diamonds, etc. They're all higher. Futures are higher. Futures indices are higher. You're going to notice that at some time and at some point, and it's really evident when it comes to earnings season, some of these indices are moving in divergent ways. So for example, today Russell has a gain of 1% and you're having the weakest index for the trading session today, which is NASDAQ, for example, which is 0.44%. So you can see that they're pretty much into a leader and laggard category. And I also apply a strict set of trading rules and a 10-point scoring system that enables myself and my traders not only to identify trades with ease, but really trade stress-free. And we're trading price action levels stress-free. I also like to specialize on high velocity moves. So because I do have this system that is in place that enables us to see further targets and to look at the bigger picture within charts. For those of you that want to learn more about Trade Out Loud, you could visit our website, or you could go on our Facebook, Twitter, YouTube, or LinkedIn, and the handle is Trade Out Loud. I do post some trading ideas on Twitter. I try to be as much active as I can. I do run a full-time trading room, and I also run a full-time stock swing trader program. So I'm very busy. I trade for myself. I also teach some classes. So I have my schedule really busy. However, I like to post as much as I can on Twitter, some trading ideas before they happen. All right, so in today's presentation, we will talk about how we can create a game plan for the third quarter earnings season, because the earnings season has just started and we just had the tech companies report earnings. So we're going to dive into that. And I'm also going to help you prepare and determine entry stops targets using technical analysis. And also we're going to talk a little bit about how to trade stocks versus futures in mini, and what are the best times to execute these earnings trades. So let's get started. So first of all, this is the best time to learn how to trade. Okay, so this is the third quarter, so this is the typo right here. So the third quarter has just started. So what does this mean? It means more market moves, and not only just simple market moves, but it means velocity moves. So a velocity means that possibility for the follow through, and also return of volatility, which is good for price because it creates that momentum for our price swing. So we get bigger price swings. So in case you're asking why futures, okay, so I have been a stock trader for a very long time. I have been advised by my accountant for tax purposes to dive into a market like the futures market where you have a lot more tax advantages. So I'm not an accountant or a financial advisor. I cannot talk to you and preach you about that, but I can tell you, you could go on the internet right now and type into a browser the advantages of trading the futures market compared to the stock market, and you will see there you will be a true believer into the futures market. Plus, it's so much more easier. Plus, you have capital efficiency, which is much greater than you would trade the stock market. So first of all, the futures market, you could take a short position with these. You don't have that uptick rule. Those of you that are stock traders, you know what I'm talking about. You have really reliable volume, especially if you're trading the London session or if you're trading the New York trading session. You also have really good reliable volume for swing trading, even into the Asian session. The advantage of futures is that you're trading major markets. You're trading NASDAQ. And think about it, you're trading basically all the components of NASDAQ. So you're trading those 100 stocks into one index. You're trading the Dow market. So the Dow market literally represents the 30 stocks under the Dow. You're also trading the S&P 500, so you have 500 under the belt of the mini S&P, and you're trading Russell 2000. So you're trading major markets and that potential major moves in those markets. You can trade futures for income or for wealth. For income, you day trade, and for wealth, you swing trade and you actively invest. For example, there are a lot of traders that invest in futures gold or invest in gold. Gold futures is a really good vehicle for that, or you can hedge positions using futures. You have different tick values and price ranges for different types of accounts. For example, a tick value in YM. In YM, one tick is equivalent to 1 point is $5, or for example, into the mini S&P, where 1 point is $50, where one tick is $12.50. So you have different price point ranges and different kind of markets. So you can find, based on your account size, you can find an index that you can actually follow. You also can trade minis and micros. So you have a wide participation of traders into these markets. You have really high volume participants, which are the institutional traders, and definitely they're diving into the full size contract. But for retailers, you have the best thing that ever happened about 2 to 3 years ago. I believe it was like 2000, I think it was 2018 when the micros came out, or 2019, I'm sorry, 2019, 2 years ago when the micros came out. So a micro, in case you do not know, if you're very new to futures, a micro represents 10th of the size of the full size contract. So you could basically trade with a very small account size. You don't need to use a scanner because you're basically going to be watching 4 charts or 6 charts. I watch 6 charts on a day-to-day basis. I will share with you how these charts and what I'm looking in these charts at. Where you also do not need a special indicator. No special indicators. All price action is going to do all the work for you. Like I said, you have a lot of tax advantages here in the US that have the 60-40 rule. If you live in the UK, oh my God, like you really need to look into futures trading. There's no pump and dump. It is safe from rumors, no manipulation, no downgrades, no upgrades that you need to focus on. Because even if you have a stock that within the index that will have an upgrade or a downgrade, is really going to be evened out by the rest of the stocks that are within the index that are going to level up the playing field. And of course, it is a 24-hour market, so therefore you have hands-on risk. So what this means is that if you see an opportunity that is happening later in the day, or you're seeing an opportunity later in the night, or even in the overnight, you can take advantage of it. Or if there's a sudden market, let's say, change in the condition, you can take advantage of that, or you can you can put trail stops and you can protect your positions even in the overnight trading session. If you wait for the market to open, you're pretty much going to, if you're trading stocks, you're pretty much going to see a gap up or a gap down in the market. So you cannot take advantage of what's happening in the overnight trading session. And the futures market allows you to do that. This presentation is for traders that really want to achieve above average gains and are very serious about trading, about power trading the futures market, because the futures market are really a powerful market. In 2020, we have made over $162,000 per contract. So all the trades are on our website. If you go to our product on our website, and if you scroll to the very bottom of the page on our product page, for example, on our trading room or stock swing trader program, you're going to see that we have a tab where we have the portfolio, and the portfolio is not only for this month or for this week. No, it's for the entire year. And plus we have the portfolio there for a few years now. We have started the trading room in 2017, so you're going to have all the trades that have been posted in the trading room since then. Also in the stock swing trader, you're going to see data that goes back to 2010 and 2011. So how do we do this year? How are we situated this year? So this year we are over $105,000 year to date by trading one contract. So that means that if you join our trading room, if you take all our trades, and obviously you have to stay and stick with us because we do have the performance to prove that. And if you take all our trades, literally without knowing anything about trading, but my instruction on how to take the trades, you would be up with a full-size contract. If you take all my trades, this is your result right now. Definitely trading 6 charts a day, 2 hours, 6 charts, 2 hours a day, stress-free. Like for example, today I cut the room short because I had this presentation. Typically the room is until 12 o'clock, but we have made our money in the morning. So I'm going to show you what we did today as well. So one of the reasons many traders gravitate towards the futures market is the relatively low startup cost, because, for example, it usually requires about $30,000 to open a stock day trading account, and you must maintain at least $25,000 to keep that day trading status. Well, the futures market allows you to open an account for as little as $5,000. And I do not believe in those accounts that are $500 or $2,000. Please, if you're really serious about generating income in the futures market, you have to know better than that. So you're not going to be able to have a good position size with a $500 contract, even if you have, a bigger leverage that is available for other countries. So $5,000 is the start point. And best of all, you don't have to maintain that amount, because as long as you have sufficient cash in your account to cover the margin requirement to trade the commodity, you could actually have a balance of $700 to $800 and still trade the commodity or the futures mini or futures micro that is, and you could still trade it. So earnings, this is a big deal. First 6 weeks of earnings season are typically extremely active. This is where the market is going to gyrate a lot, and it's going to produce most of the money into the market. The rest is going to be a more latent kind of phase into the market, where you have to focus more on unique trades, focus more on the trend, focus more on specific strategies that will generate income in a slower market environment. So company earnings are released before the market open and after the market close. There are no earnings that are happening within market hours, so often causing a substantial move in the underlying stock. So this is happening outside of the regular trading hours. The largest reactions typically occur when the company substantially exceeds or misses expectations. Having access to extended hours trading will allow the futures trader to react quickly on the news and participate in the initial reaction to positive or negative news in the underlying stock. So for example, you could capture big moves in NASDAQ before or after these companies report earnings. Amazon, Google, Netflix, Apple, Facebook, Boeing, etc. So for example, this is an earnings calendar for this week. We are right here right now. This morning we had MasterCard that reported earnings, and MasterCard was a little bit higher. Last night we had Facebook, PayPal, and Qualcomm. These are 3 big players within NASDAQ. And you can see that if you look at these specific charts, you're going to see that Facebook had a move down. It actually gapped down. We actually had PayPal moving lower as well, but Qualcomm balanced it all out, and Qualcomm was a little bit higher. So as you can see today after the close, we have Amazon that will be reporting earnings, right? Amazon and Pinterest are due to report earnings after the close today. So what happens in, for example, this image I took earlier this morning, it was 8 o'clock when I took this image, okay? So you can see the date right here. So this is the sideways action that NASDAQ had. And the sideways action towards a little bit more bullish was influenced by Qualcomm that was actually reported earnings and was poised for higher. The reason for that, and you could see how it influenced, I'm going to bring the screen right here so you can see it. This is NASDAQ. This is NASDAQ right off the open. I'm going to put here QCOM. This is Qualcomm right here. I'm going to use the same time frame as you can see the 5-minute. So you can see the in-sync momentum moving to the upside, and you can see in-sync momentum moving to the upside, breakout, and moving levitating into the highs. And you can see how it's mimicking the price action of Qualcomm is mimicking the price action of NASDAQ. So this is what I like to take advantage into earnings season. Now, earnings are not the only influencers in the earnings season. Economic events are going to be a constant influencer for price action. So economic indicators are a main driver of price action in the pre-market trading session, and a majority of economic data is issued at 8:30. So this morning we had a lot of data that came in at 8:30. We had the GDP numbers that came out at 10:30 today, and we also had pending home sales that came in at 10 o'clock, and those numbers are influencing the market. So a disappointing GDP made a really flat open, and right after a really flat move towards the open. And once the price opened, the fundamental side took control of price and pushed the price higher. So you could see that the economic disappointment from the GDP numbers, from unemployment claims, were balanced out by price action, by fundamentals, and it should be that way, because the market should not be influenced on the news base, but should be influenced on definitely on the side of fundamentals. Okay. So Facebook, Amazon, Netflix, and Google, also known as the FANG stocks, bring great potential to your portfolio, but are very expensive to trade. So for example, even in NASDAQ futures, they futures outtrade all the FANG stocks combined by a wide margin. So NASDAQ 100 is a great way to access top tech market opportunities. Capitalize on capital efficiency on futures can translate to significant savings. So you can take advantage of this market 24 hours before it reports earnings and after it reports earnings. But remember, you have a really small window of opportunity for this really huge opportunity that the market provides within earnings season. So sink your fangs into the mini S&P, into the mini NASDAQ 100 futures. So let's take a look. Very few traders know they can trade stocks through futures and can take full advantage of these big swings into this market. And in fact, today we took advantage of a trade in mini S&P. We took a trade in NASDAQ. I had to take off, but we also had a trade into the mini Dow that actually hit targets and now pulling back. So Facebook, Amazon, Apple, Netflix, and Google, these are the FANG stocks. So what does this mean? Okay, so how to exploit earnings season through these indices. So like I said earlier, the Dow is composed by 30 stocks. The S&P has 500 stocks under its belt. NASDAQ has 100 and Russell has 2,000. So definitely when you have a big influencer, for example, the Dow, when you have earnings from, let's say from Boeing or Disney or UNH, these are very big components, or Home Depot, these are very big components within the index, and then therefore you are going to have a really big reaction within the index. So the index is going to carry relative strength. For example, if NASDAQ is going to have, let's say, bad earnings from, let's say, Netflix, from Google, from Amazon, you're going to see that NASDAQ is going to try to pull back. And actually just start selling. So you can take advantage of these market moves. So you could definitely sink the Dow stocks. For example, Caterpillar, when Caterpillar reports earnings, you're looking at the parameters, you're looking at the first reaction that comes out after the earnings season, and then you're going to be able to watch and identify how the trade is going to play out. And then you're going to determine your levels into the corresponding index, and therefore you're going to take action based on that move. So for example, let's say we have earnings from, and these are the Dow stock. Let's say we have earnings from Caterpillar. Okay, so if Caterpillar is going to be up, you're going to determine your levels, your day trading levels, also your swing trading levels. You can day trade, you can swing trade, and then you can take advantage of that, because if you see that the levels are being met and exceeded in, for example, in Caterpillar, you could go along with confidence, for example, here, or even add over this high velocity bullish above area. So here's a little checklist on how to trade earnings through futures. Number one, you have to check your earnings before the market opens and after the market closes, and historical time to release the report. That is very important. Also trace the levels and plan your trade. So that means that you have to get down to your drawing board. So for example, in the futures indices, if you have a trade that is coming out from Amazon post-market, like today, you want to trace your levels in NASDAQ, because you're going to need to determine support resistance, confluence areas, and so much more, trigger points and patterns that are likely to either break out or violate the current levels. And when Amazon, and you're going to have to do the same thing as you're getting closer to the close of the market into 4 o'clock. So typically you do it around 3:30 or so, and based upon the earnings releases, you could take advantage whether going long or short NASDAQ. So trade and watch NASDAQ for NASDAQ stock reports, and trade and watch Dow, for example, for Dow reports. And for example, the mini S&P is also very sensitive to energy data, also very sensitive to financial data. So when you have financials that are reporting earnings, you're more likely to have an impact into the mini S&P. The next thing is, when is the best time to execute these trades? Like I said, there's a lot of pre-planning involved, but it's not sophisticated, so nothing that can not be done in maybe 10 minutes or less. So the best time to execute these trades are either before the market opens or after the market closes, obviously when the companies report earnings. So how to prepare? You need to know when certain stocks of interest report and have a really good understanding of prior earnings behavior of the correlated stock that you will be trading via the corresponding index. You have to determine the key levels and plot the trade. Now, I know you're not going to hear a lot of not only a lot of presentations. I don't think you're going to hear this information from anybody else out there. We have been pioneers in the futures market for a very, very long time. And we came up with courses, we came up with a lot of seminars and a lot of webinars. And about 6 months into the process, we had a lot of other companies that pretty much carbon copied our presentations and started to share them. So we're trying to come up with unique presentations that you can take advantage of, and definitely can differentiate us from the rest, so people can see, traders can see who the real deal is. Okay, so for example, a move in Netflix, you can see the Netflix right here. The gray highlighted area represents the overnight session, the extended session. And the white highlighted area represents the New York trading session in both charts. This is Netflix and this is NASDAQ right here. You can see that Netflix has been ranging here, and there are stocks that tend to range into earnings season, and there are stocks that tend to, some of them like to run into earnings season, and some of them like to pull back into earnings season. But definitely Netflix is one of the stocks that decided to range into earnings season. And definitely we do have whisper numbers as well. And if the whisper numbers, for example, are positive and there are any, clues that, the price may go higher, subscription, if the number of subscriptions are higher, or, something along those lines that would typically pop up the price, definitely this is going to be on watch, and the price is going to be sideways. When we had the pop-up in Netflix, we also saw a range and a breakout in NASDAQ. So NASDAQ, you can see here that it had a lot more divergence, because look at this little belly that we had. So we had a bigger pullback than the range in Netflix, but the level is the level. So this is the prior resistance that is going to react into the earnings, because it's going to represent minor support for ongoing price action. If the price is going to trade above this, price is really capable of rotating higher. So at this point, you can see here that we had a little bit of a pop-up. And by the way, it happened. So I think a couple of weeks ago, the CME came out and they said, you know what, the futures market used to close at 415 and reopen, close at 415. It will reopen at 430, and then it will close again at 5, and so on and so forth. We don't have that anymore. So now we can take full advantage of the earnings season. So because the market had to close, like I said, it goes all the way to 415, and then it closes again. And depending on the companies that are reporting right after, Netflix is obviously not the only stock that is reporting, you're going to see some divergence. But look at the levels, and definitely if you have the majority of stocks, of earning stocks that are moving higher, if you have a relative strength momentum into the market, look at this big move that we had. And this is actually a swing trade that I did, and this was the breakout. The overnight trading session formed as support, so it had a very limited risk into the 10 EMA, and you can see the massive move that we have. So it was over 13,000 with 13, let's say it was 13,025, I think, or 13,050. And you could see here that a massive move that we had, 300 points, over 300 points move to the upside. Guys, let me remind you that a 300-point move, if you're trading it with a full-size contract of one point is $20. That is a $6,000 move with one contract, okay, with one contract. And if you're trading micros, that's a $600 move, $600 move. So remember, if you have a $5,000 account, and if you capture some of these moves within earnings season, this is the time when to trade and actually learn how to trade. So for example, here, things don't always go up, things go down as well. So you can see here we have a 15-minute NASDAQ. We had Netflix as well that reported earnings. This is a different trading period. I wanted to select Netflix as well. And you can see here that Netflix price went down. It actually moved down very, very quickly after it reported earnings, and you can see the immediate reaction into the NASDAQ as well. So at this point, you treat NASDAQ as the base breakdown. You can see that it has support right into the upper 7360 right here. You can use the stop into the 7380, and you can have the price follow through lower. So for example, just to give you an idea of how this would play out in your portfolio. So you have the short at 7360, you have the stop 7380, the target 40.25, And this is, risk, obviously 20 points, that's a $400 move. That's a $400 risk for this trade. The profit, 35 points, that's $100. That, in my book, I would take this every single day. And by the way, this trade happens super fast. The trade duration is 15 minutes. You don't even need to hold it overnight. Okay, so here's the institutional money flow. This is very interesting, guys, because on this day here that I have on the slide, we had Google, we had Amazon, and Microsoft that all reported at the same time. And you could see the momentum. And you could see the similarity of the move. And you could see the pop-up in all of these stocks. And NASDAQ, that is replicating NASDAQ futures, that is replicating the movement as well, consolidating in the overnight trading session, and huge pop-up. These are the types of trades where you could get hundreds of points, and I'm talking hundreds of points. For example, this is a 200-point move, and a 200-point move that represents about $4,000 with probably a risk of about $500 on this trade. So definitely worth taking a second look on how you can sink your fangs into the futures market, and take that second look into the futures market because you have so many advantages. Correlation is very important when it comes to trading, and you could see here that at sometimes you have divergency. So you don't always have synchronicity, like all the indices going higher or all the indices going lower. So this is something that you need to pay attention to. For example, on this very day, we had earnings from Walmart. Walmart started to pop higher. Walmart is a big component in the Dow, so therefore Dow started to move a little bit higher in sync with the momentum from Walmart. On the same day, guys, same day, you can see the same day right here, we had earnings from Apple. Apple disappointed earnings, then Apple started moving down, and guess what? NASDAQ moved down. So it's always a great idea to take your trading to the next level. And I know that typically futures traders like to you know, I don't know for what reason they like to simplify their life. They go like, oh, we're only going to trade the M and the S&P. I have no idea why. Because, for example, there are moments when the S&P, and by the way, this was one of the days when the S&P literally was flat, didn't move. So you would not make any money. So why not learn a little bit more on how it is done, and you could actually take advantage of this. And once you can see this sell here, this is a sell because you could actually go long YM and you could short NASDAQ. So you would actually hedge your positions. All right, so what to look for? First of all, you need to look for the trend. That is going to determine your directional bias. You need to look for support resistance levels, areas, and remember, these are not exact prices. Even if you have support, let's say at 15,040 in NASDAQ, it is the area around it. So very important concept. Also, time frames need to be in sync. So for example, if you want to trade the FANG stocks through NASDAQ, just as an example, just because, and I prepared this presentation because we have Amazon earnings after the close, and I thought it was very important to talk about this. And I know that nobody talks about this, so I wanted to bring it out to you. So you need to have the time frames correlated. So if tonight, for example, you want to trade, for example, Amazon or watch Amazon, determine the levels in Amazon, determine the levels in NASDAQ, and then be ready. Identify the patterns and be ready. Identify the trend, etc. So be ready for some action. And of course, you have to plot your ESTR, that's your entry, your stop, your target, and of course, your risk to see if the risk is worth actually taking the trade. Try to determine the entry based on the chart time frame that is providing you with the most information. So what that means is that I get this question all the time, what is my favorite time frame? What is my favorite time frame? And the reality is that I don't have a favorite time frame. The reality is that I watch certain time frames, how they perform throughout the day. I know that in the first 30 minutes, I tend to watch the 1 and the 2 minute charts because those provide you with a lot more information on price action. But I also navigate towards the 5 minute because it eliminates all the noise once the 10 o'clock is there. Once I have my first 30 minutes into the market, I navigate towards the 5 minutes. So it's not like one time frame fits all. And then again, it's about finding where the pattern is forming as well. Also you have to define your entry based on your strategy. What strategy are you using? So you have to really be a good master of strategies. You have to know where exactly to place the stop so you don't get dinged out of trades. And especially this market volatility, there are some little tricks that you can use of where to place the stop so you can have a better chance of your trade following through. Also, all you have to do after you determine everything, where your entry is, where your stop is, all you have to do is wait for the entry, and then you wait for the execution, wait for the trigger. And also have a trailing method in ready to apply. Now remember, some of these trades may still, may start going in the overnight as well, and may have a really good continuation. But if you're a day trader, you want to make sure that you take advantage of that momentum move and you treat it as a news play. And news play cannot be it's very hard to trail it. So therefore, target, done, hit, out. Okay. All right. So some advantages to trading futures, like I said, you don't need a big account. The stock market requires you to have $25,000. The futures market, you can open an account with $5,000. You have lower commissions. You have a lot of tax advantages. Like I said, you have, and by the way, guys, I haven't even mentioned this. At the end of the year, you get a 1099B report, and that's all you have. It's basically 1, 2, 3 sheets, and that's it. You don't have to report all the data with all the trades and everything. So because I'm doing a lot of stock trading, I have like literally files and files of information every single month, and pages and pages and pages every single month, because I do trade, I have quite a lot of swing trades. But with futures, you only have a 1099B report. You download it, you send it with your taxes, you're done. And you have a really good volume. So how many trades do I take per day? Well, I only take between 3 to 4 trades a day, because I don't want to exceed, I don't want to over trade, so I calibrate my trades. Sometimes, for example, for today, it doesn't mean that I need to take those trades. No, sometimes I only take 1 trade. For example, today I only took 2 trades, okay? So analyzing overnight price action, going into the New York trading session is very important. So the overnight price action, when determining these levels that you want to trade the earnings on, will determine your key support resistance levels, the overnight highs, the overnight lows, the ranges, or trend that has been established. And it will, because these levels, if the price is going to get a pop, let's say the price is bullish, it's popping up above resistance. When it pulls back, it has the tendency to pull back into that prior high. So that's why it's very important. No one has a crystal ball, and what seems certain one moment can change in the next. And our job is to find low risk setups and definitely manage the risk. Trading is a serious business. It's the hardest thing you will ever do, but it's actually the most rewarding. When I look back, I don't regret 1 second. All I regret is like, why didn't I quit my job sooner to start trading? Literally, and I'm not kidding you guys. You cannot learn how to trade from a DVD or a book. That is for sure. You need a real-time coach, a real-time mentor. That's what I had, and that's what I'm giving back to my traders. I was very fortunate enough to have 2 mentors that walked me through my first 3 years of my trading career, and I was so fortunate to have them drill information into my head every single day for 8 hours a day. You need a mentor that is there for you, that can coach you on what you need to do. And most of all, follow his or her footprints. You don't have to reinvent the wheel. If that trader is successful and has a track record of successful trades, then you will be successful. No track record, no success in trading. So when you take a trade, think about this. Who are you trading with or against? Don't try to be stubborn. I get this question a lot, and especially, even in my trading room, I have traders that, say, oh, can we short now? It's like, are you kidding me? Like, look at the market. The market has this really strong momentum. Why are you trying to capture a high? Like, for what reason? There's a reason why the stock isn't trading into highs. There's a reason why the index is into high, right? You don't short that. There are specific times when you short. For example, they're a lunch phase. They're totally different. Or if you want to buy a bottom or buy any kind of dip, then you have to have a certain reason to do that. If you want to be successful, you need to live and breathe trading. You have to learn how it is done and not just, follow someone blindly. So it requires dedication, patience, effort, and a lot of passion. And this is not a get rich quick scheme. If you're really lucky, and I'm really lucky to get a mentor that can make money while you're learning, oh my gosh, you got it made. Okay, so we have, we're actually wrapping up the Power Income Futures Trading course tomorrow. It was a 5-day affair, and we're opening doors again for the August class. This the Power Income Futures Trading course is going to teach you from A to Z. We're going to take you from student to professional trader, and not only that, but you're going to have your we're going to be holding your hand through the entire process. We're going to be teaching you powerful trading strategies, how to enter, place stops, what risks to use, how to calculate targets, market rhythm, market tempo, market timing, how to maximize your time in the market, and how to maximize your profits using very simple indicators that are literally free on your charts right now, like a couple of moving averages and volume, and that's it. They're very easy to use. Your focus is going to be more on price action. We're going to teach you how to use precise market timing, precise location, and we're going to teach you technical analysis A to Z. So A to Z, you're not going to need another book. You're not going to need another mentor. You're not going to need anything else. And if you're interested in how it plays out, I know today is Thursday. If you want to be in my trading room tomorrow, I can offer you a free pass just to see the caliber of the trades. So send me an email at info@tradeoutloud.com. You can see it right here, and I will send you the link for tomorrow. Okay, it's just say subject title, Investors Expo free offer. So I'm going to give you 1 day free so you can see what the members are mentioning in the trading room. By the way, almost 95% of the members in the trading room are actually graduates of the Power Income Futures Trading course. So we teach you institutional level. So for example, I'm going to pull it right here. We got 2 minutes left. I'm going to pull it up right here. You can see that we have a bullish above area, and once the price clips above this level, you can see how it is drawn into the all-time highs and creating new highs. Also, you can see here that we had a moderate bullish above. We have the FOMC high. These are critical levels. This is the trade that we did today. 36 was the entry. The stop was under 20. And look at the beautiful follow through that it had. It got into resistance. And then now again, if it's rotating and breaking above the 75 area, it will start moving higher. And again, here in Russell, we discussed it. I was like going back and forth. And I mentioned it in the trading room that I did not execute this trade. So just FYI, I had S&P and I have the mini S&P and NASDAQ, so I have my hands full. But I was thinking about, getting in on Russell right into the 38, right into the bullish above, applying a stop into the 32 and the target into the 47, and with continuation into the 58. Now you guys just watch it. It may just go there today. Okay. So if you're too broke to invest in yourself, get used to staying that way, because trading is not easy. We only have 5-star reviews from our classes and from the trading room and all the services that Trade Out Loud has. We have only very, very, very happy and super profitable traders, and that's why they're sticking around. We have traders that have been trading with me for more than 10 years since Trade Out Loud came about. So we're having a 5-day power course that is going to start in August. It's actually the last full week of August. The trade, you're also going to receive the recordings from the class. You're going to receive the ebook for the course, which is almost over 400 pages. You also are going to get a free risk charts with this. And you're also going to have access to student-only specialty courses, just like this one that we did free for you guys right now. So if you guys want to take advantage of this, we're opening doors. And guess what? The bonus is for 3 months in the trading room. And guess what, guys? We're going to be offering you, if you sign up by Friday, so not today, think about it. Watch all the presentations today and think about it. If you are committed, not only that I will give you an extra free month, so the month of August is going to be on me, but you're going to have another 3 months besides the free month that I'm going to give you for August. Plus, I will provide you with all the recordings from this past course that we've done, so you can catch up, and then you can come for the retake, the full retake on August 23 to the 27th. The course is Monday to Friday from 2 o'clock to 4:30. Like I said, it's a 5-day, and price is going to go up in September. It's going to be over $7,000. So it's really going to go up. We have had this price for the last 6 years. So it's time for the price to go up. All right. So we have a lot of demand. So thank you so much, Investor Inspiration, for having me. My time is up. Visit our website for more information or email me at info@tradeoutloud.com. Thanks so much, Anna. Good luck with the presentation.
Hello, everybody. Appreciate your time. It's been a busy morning, so I have not really prepared for this, but I'm used to these presentations. Today we'll talk about scalping. And here's the idea behind this presentation. I have not done scalping in the room, in our live trade room, or in the Telegram, which is right here. This is our Telegram messenger. We have 1, 2, 3, 4, 5, 6 different channels. One of them is absolutely free. You can just join it. You can go to the website, which I will show you later, and just click and join this channel. It's free. It's open to everybody. But I have not done scalps in a while. And the reason for that is that by the time you type a scalp right here, the trade is gone. So recently I decided to, in the past, it's been a month now, I decided to add scalping because I could do it. It's very simple, but it's fast. So I decided to add midterm scalping. I'm not talking about scalping for 5, 6 ticks. No, you can do that for target one, but I'm talking about scalps that would go for a little bit more, right? And I decided to do a webinar about this because all of a sudden, when I added scalping, I have a lot of interest from students. Here's the idea why. Because if I'm doing swing trades and longer term trades, we have a lot of time that tends to get boring. It doesn't bother me in person. It really doesn't bother me. I'm a very patient person. They call me Mr. Patient. But my students get bored sometimes. And when you get bored as a trader, unless you have somebody that is trading with you, such as myself, you will tend to make mistakes out of boredom. It's a fact. It's a reality. Okay. The idea is that once I am gone from the live trade room for that day, let's say 11 o'clock, I close the room and I switch to Telegram. We do this. Then people will be not as focused. I try and keep them focused as much as I can. Now, there is a link that I provided, Anna, which has all the information you need to know. It's she will send it. She will share it with everybody. Maybe now, maybe later, up to her. Okay. So now, using volume profile with scalping. Now, next step is, before you join the trial, here's the thing I forgot to mention. We offer 2 weeks free trials. I refuse to sell anything to anybody, or my sales manager will not sell you anything unless you attend the 2 weeks trial. So basically, you buy if you like. If you don't like, no problem. So I refuse to sell, and I've been doing this for the past at least 18 years. I offer trials, so 2 weeks trials, that you will join the live room, you will join all the Telegram channels, all of them. The elite channel, the elite students, I have 141 members. The indices, 150 members. Currencies, 123. Oil, which is crude and nat gas, and the metals, which means gold and silver. Okay, so far so good. So join the trial. And next step is this. If you join us, next step is this. You need to watch these 2 videos before you join the trial. And these 2 videos are, or at least 3 videos, I would say, not 2 videos. You go to About Us, please, and you go to Education, and I'll be very generous with my information today, so please be patient. I don't care if I finish the rest of the presentation, which is basically focused on the end, focused on sales. I don't care about that. But please, if you go to this section, Education section, under About Us, I have a video here. Now 1, 2, 3. These videos are very important for you to watch before you join a trial. The rest are important, and really I encourage you to watch this video. For example, this was psychology video made by Dr. Kenneth Reed. I'm sorry, this one here, ADD. This is a very important video you need to watch. I used to joke about it, but it's really, I'm not joking. Unless you're getting married today as a trader, you need to watch this video. This was made 2014 by Dr. Kenneth Reed, and it's an eye-opener about your psychology. Okay, so far so good. Excellent. Now, next step is this. What do we have? Next step. When I started my career a long time ago, back in 2000, 2001, my focus was basically futures, forex, and then I switched to futures. And then I decided, you know what, technical indicators do not work. And I'm very, what do you call it, comfortable saying that technical indicators don't work. They would work 50% at best. If you add something logical to it, such as volume, then there's something there. You can honor some indicators, you can dismiss some indicators. But when I started in 2005, specifically from 2001, 2005, I spent time on this, which was the bid and ask ladder. We don't use it anymore, but this is the mother of my strategy, because from this, I was able to create so many things. Okay, I simplified it. It's very simple now. It's a simple strategy, and it's not very hard to follow. Okay, I was able to create the buying pressure, selling pressure. I mean, spot, not create. Do you trade support resistance, or do you trade with indicators? Let's see why most indicators don't work. You don't. Can you see your stop loss ahead of time? No, you can't. And on the website, if you go back to the website, I encourage you to go back to the website. Go to the front page. I got a very, very emotional, to me it's emotional, from a student. If you go to the main page, that joined me in 2005. I told you in 2005 I started looking into the tape. He joined me in 2005. It was a live session at that time. I used to do webinars or seminars such as this. I'll show you here. So he was part of these groups in Toronto in 2004 and 2005. Okay. 1 second. I'm getting some kind of, okay. So he joined me during these live sessions. Okay. Back in 2004, 2005. Okay, give me a second, folks. Give me a second. Let me just do something here. Oh, where is it here? I am going to close my Sierra charts. Give me a second. So let's go back, and let's go back to the website. So this is the website. If you go to the front page, scroll down, he gave me a testimonial, and I didn't know. He gave it to my staff. Then I texted him. I said, "Thank you for the amazing testimonial." He said, "I meant every word of it." I was a victim of online bad reviews and crap like that for many reasons. I don't want to get into it, but I offer trials regardless. I offer trials regardless of anything. And if you want to know about my history, everything is here. Look at my CFTC case, and go on and look into the rest of it. Testimonials, YouTube channel, everything is there. Okay, so talking about the strategy, how do we trade, and how many contracts, and how do I manage trade calls? Okay, I'll give you an example, and please pay attention, because I will go over a few things that you need to know, including volume profile. Let's assume that the market is going up. Let's assume this is the NASDAQ, NQ. I do it. I trade it sometimes. I focus on I do forex. I do futures. We do a lot of things. So let's say the NASDAQ is going up. And all of a sudden you want to go long because it is a bullish trend. For example, the word trend is an overrated word. I don't like to use it, but it is what it is. So for you to understand. So you are going to be looking for, not you personally, but if you're trading, let's assume that you're looking for a trade. So you would think, okay, I'm using Fibonacci. which is, everybody knows Fibonacci levels. And you would say, okay, I have a level here. You would say, I have a level here. I wanna take it, or I wanna take a level here. This is my main level. Why this is my main level? You would say, not you. I'm talking, not me. You. I would say, as a trader, you would say, this is 50%. I want to take it at 50%. And there's another level at, let's say, 68%, which is the golden form, 68%. You would say 68%, okay, for example. And this was 38%, okay? Now, here's what's going to happen. The market comes down here. You take this trade, say, okay, it's going to move. I'm going to give a 30 tick stop. Remember, my trade calls are based on 3 contracts. It could be 3 lots if you were doing Forex, because we do Forex too. It could be 3 contracts, or it could be 3 micro contracts, or it could be 6 or 9, multiples of 3s. It doesn't matter. 3 contracts. When I call a trade, I call target 1 immediately. I tell you target 1 is, let's say, 20 ticks. So 20 ticks on target 1, meaning we got 40 because we take 2 out times 2. Okay? Times 2. T1 is on 2 contracts, which means if you took 20, you got 40 ticks profit. And then we keep a runner moving stops. No. The market comes here. You don't do volume profile. You don't trade any kind of volume. You don't see the actual reality of support. Sorry, what the market makers are intending to do, and they are tricky. So the market will take your stop, and now you're stopped out. 30 ticks goes in your favor. You say no. They just poked inside, and now it's going to go up. You take it long again just for it to come back here. 50%. You say, okay, I'll wait for 50%. Hits here. You take the long, it goes in your favor a few ticks. You're so happy, it comes back down, takes your stop, and then finally goes up. You got two stops. Now, regardless, you don't want to trade anymore because you got 2 stops and probably you over leveraged yourself. Now you're done. With volume profile, it's completely different, folks, because ahead of time you will see it, and I will show you. Ahead of time, you will see your levels. If I go to volume profile, do you see these colored levels here? This is volume profile. And if you go to the website, you will see a lot of videos under education on this. These colored things are volume profile. And you see lines on them. These are my lines. You see the black line here, blue lines here. And I will show you an actual example very soon, okay? Just bear with me. Volume profile, which is, we call it VP, will give you a few things. Will give you levels. Levels are continuation, and then after that, after the continuation level, there is a level called rejection, and then another level that is continuation. It's very simple. Volume profile will give you continuation, and then rejection. Now, I teach this in details in the members area. If you go to the members area, if you're a member with us, this is complete details. I teach this in details, okay? Once you get access, you will have different sections, and 2 of them are focused on this, and I'll show you the members area. As a member, you will get, for example, you will get, where is it? Here, level 1, getting started, okay, level 1. And then you will have level 2. This is level 1. See how many videos I have on each indicator and how we use it. And then level 3, for example, advanced volume profile. I hope you folks paying attention because I will start giving you some pointers, okay? So you see crash course on volume profile. You click on it, you watch it, and you move on. Very organized members area, and it's right here. Volume profile, etc. Okay, it tells you how it started and what we do. Everything is there. Okay. Now, for me to trade this, I need to find out a few things. First of all, I need to anticipate the move. Remember, we're doing 3 contracts. So I need to anticipate. Anticipate. So now I'm anticipating what? I'm anticipating this NASDAQ to go up to here as a long. But I want to catch it. I'm not in it yet. I just logged in and I see this. So I'm anticipating a long. For me to anticipate a long, what do I need to do? I need to catch a long. To catch a long, I need to find a rejection level. Folks, it's very simple. It's very simple. The volume profile tells me there's a continuation zone. Better not touch it yet. My rejection level is here. This is my rejection level. Do you see it, folks? This is my rejection level right here. Okay, now market comes here. Some people will trade it because it's Fibonacci. They get stopped out. Not us. Market comes here. Some people will trade it again. I'm not touching it because look where it is. Even if I touch it, folks, even if I take it long, because let's say I'm not patient enough to wait for it, or I don't want to miss it, folks, my stop loss is here. This is my stop. Why is that? This is my stop. Why do you think this is my stop? Because simple. If we poke inside this continuation zone, nothing will stop this all the way down here. So I know my stop loss ahead of time. My stop loss is nothing but 68% of the next continuation zone. If you folks cannot follow exactly or understand, you'll have 2 weeks with me and with my staff and with my students to understand, to ask questions, to follow. Okay, now this is my continuation zone and I'll wait for it right here. We got to the rejection zone. Now this rejection zone, it's showing me volume profile is going to be rejection. What's next? I anticipated this move ahead of time. I anticipated to go long ahead of time. So what's next? Next thing's confirmation. Now I need to confirm this trade. How do I confirm this trade? What do I do to confirm this trade? Don't you think market movers or market makers or big boys have anything to do or something to do with entries and moving the market? Of course. So why don't we look at their levels and what they're doing? So if you have a sneak peek at what they're doing, if you know where their entries are or where the heavy volume is, as it happens, not historic, that will make it easier for you. So the market comes here, okay, and all of a sudden you see I will do it in orange. You will see heavy action here. You see it popping up because I have an indicator will steal those signals and will show it on the charts. You know, volume is popping up, and all of a sudden you see your arrow comes up too. This is your long from the very bottom of the move, and your stop loss is right here. It's already established. And if the thicker the area is in terms of volume, the stronger it is for your trade. And then the market goes up. It might linger a little bit, whatever linger goes up. You take your target one. Your target one is on two contracts. So today, for example, target one on the because I call the scalp. I call it the midterm scalp, not a very small scalp. I'm looking for maybe 100 ticks on the Nasdaq overall to achieve. Maybe on the ES will be 20, 30 ticks. Maybe on the RTY will be another 100 ticks because it moves. The Russell moves too. But regardless, I called 15 ticks first target. Now, I did not call 15 ticks randomly. Couple of reasons why I said 15 ticks target one. I said 15 ticks because my stop loss was about 20 ticks in risk or 17 ticks in risk. If I take 15 ticks on 2, I already got 30. So if my runner gets stopped out after, I'm still making some money. Okay, the market goes up, and also on the way up, there was a little hiccup, we call it. That prompted me to call it 15 ticks only, because I knew there was 15 ticks span that the market will go without hesitation to it. So we grabbed first target. Now that 15 first target is enough for some students. They will say, I will exit all 3 contracts out. Some of them no, they'll say, I'll follow, let's go. And all of a sudden the market goes all the way. But it took the whole morning session, but it made it all the way up. And if you want to see, this is the chart. This is today, July 29th. First thing, the market was very slow today, right? I said NASDAQ support at 15020 area. I said support, so I'm anticipating that support. RTY this, YM this. I gave them. This is at 10 a.m., 9:59 to 10:01. And I said all these areas are possible for scalping with confirmations. So I'm anticipating the move up on all these 3 contracts of levels, but I am waiting for confirmation. 10 minutes after, I said NASDAQ long possible. So you're not missing. You're not saying. You're not telling me, Simon, you called it after the fact. No, I'm calling it right with the timestamp. I said NASDAQ long. Get target 1 now, because it touched the level, and then stop, move it to this price. Keep runner. And look at this. This was the entry, and I wanted to get to 15.085. That is 200 ticks move. This was the entry, the very bottom. Look, 15020, 15020. And this was 10 minutes after the market hit it. So anyway, regardless, at the end of the day, I said NASDAQ made it to 15.085. That is an eye opener for so many people. This is not something I've done just now. I do this every day in, day out. We are, for the month of July, 3,800 ticks in profit if you took all my trades that I called, ticks and pips, including the stop outs. Okay, 3,800 ticks in profit. Some months are not as good, but we always are. I mean, it's been now almost over 2 years now. We averaged over 1,000 ticks a month. Okay, so that is how I trade. Any specific questions regarding what I mentioned just now, so far? Because I'm going to go into some more details now. So far, so good. I'll grab a sip of water. Okay. This is the view. This is what we got today. Let me just do this. Where is it? Here. Okay, this is what happened today. You please are you paying attention? It looks busy, but really it's not. I have 6 charts, although we trade many more, but I can only show a few that I'm anticipating to trade. I have the NASDAQ to the right. You see it to the right, there's the NASDAQ. Right here, the NASDAQ. This is a recording of today's session, live session. I was recording it. So this is a 2-hour recording, okay? But I'm gonna show you only the call on the NASDAQ because we had successful calls on other things, but that was for swing trades. So NASDAQ is in the right-hand side. If I move forward, if I fast forward this, look at this, fast forwarding. But you remember I showed you the Telegram. You will see me typing those levels. You see typing. This is live when it happened. NQ support at 15020. This is during the fact, not after the fact. You see me typing at the bottom, right? You see me typing here. You see I put a line. You see the line? I'm anticipating a long. I already also said there is a long possible on RTY. You see the RTY line? If you guys can see them, please, I will do this. So I anticipated the long. Where is it? No, it doesn't work. The pen is not working here. So I anticipated a long Your stuff is concrete. Thank you. Thank you. Yes, I know. You're part of the trial now, and you're enjoying it. Appreciate it. So here's the thing. I anticipated the long. Look at the line here. Look at the line on the RTY and look at the line at the YM. None of them, except for the Nasdaq, none of the other two hit the level that I was looking for. You see? Watch, keep watching, keep watching. Look, there's a line on the YM. It didn't hit, so I did not take this trade. On the RTY, line didn't hit. I did not take this trade. If you look at to the left, I'm going to change the subject a little bit. Look, this was the crude short I called already in the morning. Okay? And we grabbed first target. It moved in our favor about 30, 40 ticks, and we got stopped out, but still a profitable trade. The crude was very slow, very, very slow. In fact, the crude I was expecting it to come down much lower, but again, it gave us like 30, 40 ticks, and that was it. Now, focus on the Nasdaq and focus on my typing. I don't know if we can catch it, but you can join the trials and you'll see. You see, I'm typing down there. You see, all these are possible scalping with confirmation. If you see me typing, this is as it was happening. Okay. Now remember, I'm anticipating a long, right? But I want confirmation. These magenta lines are nothing but my SAL indicator. SAL indicator, I created it called Simon's attraction levels. It pulls out the heavy volume that market makers are putting in there. They could be market makers, these magenta lines, you see them, folks, right? They could be market makers, could be trading bots. I don't care. As long as it's heavy volume that this indicator is pulling out and showing it on the charts. Now, I'm anticipating a long from the line. Nasdaq, please pay attention to that. Watch this. Market goes. I don't do anything. I don't do anything. Nothing. I don't care. And the crude is going in our favor on the left-hand side. You see it, but nothing so far. Pay attention to the Nasdaq. Look, what did you see happen? What did you see just happen? Look, I'm going to go back. Scroll up. Scroll back. It's coming close to it. Pay attention to the amount. Pay attention to the amount of volume that shows up. Can you pay attention to this, please? I'm going to move forward, move. Look at that. Do you see the magenta line showing? It's getting thicker, 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 thicker. I called it long. I called it long verbally in the room, and I called it long in the I typed it too. Look at this, Nasdaq long, and students know this. The stop loss is below this magenta line. So 2020 area, 2022 area is your long. Okay. Your stop loss is below it, about 19 or so. So I called it, and look at what happened. Look what this, I said, put the stop loss. Get T1 now, and keep runner. Stop loss is 1519. Just a second, folks. Okay? You paying attention? Look at that. Look at that. Pay attention some more. Now, does this strategy give me entries? No. It gives me entries and targets too, and stop losses too. Okay, pay attention. Move stop loss to 20. Why am I moving stop loss to 20? Because I see a reason, and there's nothing. I don't do anything that is random. Nothing is random in the room. Nothing is random in my trading. Okay, and I told everybody, if you want to bail out, look, I give my students, I care about my students. I said, if you want to bail out, you can bail out at 36 if you want to bail out, which is right here, because I have a hiccup. That's 60, 70 ticks move anyway. But I said, I'm keeping it. Watch this. It comes down a little bit, goes back up. Look at my arrow. Initial target. I said initial target was going to be 55, but then I changed it. All of this, folks, is written. It's copied. You see that? It's right in the, look at that. I said, this is my target. In between, I said, I'm typing, move your stop loss. I said, target 15, 15085. Do you see this arrow? You see this arrow? That is 200 ticks move on a or something. And this is now today, like just before I joined this presentation. It's nothing out of like I picked or anything. Just gave you what I was doing today, this morning. You see this? Boom. Goes up, goes up, goes up, goes up. I moved my stop loss, and see, and goes up, goes up. Look at that. Look at that. Of course, the session closed. I closed the session, live session, so the recording ends now, but it ends up going to 84, 85 area, the Nasdaq. Okay, you see that? And I posted that. I posted that in the Telegram. Any questions on this, please? If you look at the Telegram, just give me a second. If you look at the indices, which I showed you already, I said to everybody, Nasdaq made it to that price that we had in mind. Okay. So now going back, Henry Larson is saying, I have been in the trial for 5 days, even grabbed that 180 tick and the RTY. Wow. Follow, so easy to follow your trade. Yes, because I give you ahead of time. I give you entries, I give you stops and everything. How long does your system take to learn? Henry, it depends. It depends. It's not easy, but you need 2 weeks really to focus, because I have a lot of videos. But once you learn it, then you can focus on the important stuff. What platform does my indicators work? At this time, I have a platform which is Sierra Charts, and it is a problem because this indicator, the SAL indicator, it's almost impossible to get it on any other chart because of the way their market depth is constructed. So I'm trying on NinjaTrader. I'm in contact with some programmers. Hopefully we'll get it done on NinjaTrader in the future, but it's not the same. It's hard. Okay, it might get there. Payment plans, yes, we do. I mean, when it comes to sales, Henry, it doesn't matter. It doesn't matter. We can discuss it. The idea is for you to join the trial. Once you join the trial, then everything else is easy from there. Because if you like it, we will talk. If you don't like it, if it's not for you, if you're not patient to grab some trades, it's different. Okay. So I'm working on NinjaTrader. Hopefully I'll get it done. I don't know really. I don't know if it's gonna get done. It's different. But if anything, let me end this presentation because I wanna chat. If anything, if you go to our membership, which I don't usually sell during my presentations, let's assume that you are reluctant into getting Sierra Charts. Although Sierra Charts is amazing, the reason why it's amazing is because I trade 30, 40 different instruments, and each instrument has 5 to 10 different charts, and they go 1,500 days, 500 days with volume profile. Not other charts will be able to handle that. Specifically, NinjaTrader will not be able to handle that. Okay, but if you're reluctant to switch, you can simply just join the trade calls. You don't have to buy the whole package. Okay, if you go to membership, we have different packages for you. Okay, or is it the pack? Where are they? Enroll now. Yeah, enroll now. And right here at the bottom, we have a package that's only for following the trades. Okay, I don't think Sierra Charts is free. My issue with that kind of question is this: if you are paying $30 for a platform that will give you thousands of ticks because of the indicators that are compatible with it, and you refuse to get it for $30 a month, then you can join with the following the calls. I'm not going to give you education. You just join all these channels, and join the live trade room 3 times a week. And you will learn. Of course, you will learn because you're going to follow me, right? But then until you decide to get the full membership, then you can basically say, okay, I want to move on to the full membership. Okay, here are the packages. You can look into them. So I have that covered. Okay, the main thing is please join the trial. Email me. If you don't want to join the trial now, you can simply go and where is the if I go to the first page, you can simply go and go join the free update on Telegram. Join the Telegram. This particular Telegram channel here is free for everybody. Okay, just go to the traderinstitute.com. Anna has a handout. Anna, could you provide it please to everybody? Right?
Sure, PDF, Telegram
Yes.
channel,
Yes,
and
please.
the website.
Yes. Now, again, if you don't want to do Sierra charts, I am working on NinjaTrader. Hopefully, I'll get it done. Hopefully, it's not easy, but it's gonna maybe between now and the next 2 weeks, I will know where I'm heading, and because I have demands for other platforms to use. Since Sierra charts got independent now, they don't deal with brokers, so they don't offer free platform if you join a certain broker. They are getting independent. Now I'm trying to get it on NinjaTrader, and it's not something optional for me. It's because of the demand. My members want to have a different option. The problem was that is the SAL indicator is not going to be the same. It's going to be close to it, but not exactly the same. But it will do the job. Okay. The rest of the indicators could be done. We have different indicators. We have multiple indicators, and we have these power lines. We have the reversal levels, etc. Okay, so please go to the website, get your trial, look into the website. If you go to our YouTube channel, we have beautiful YouTube videos, including maybe this one if you want to see. It's not, look at this one. This is similar to what I've done for you guys. See how I type. This is from the live session just 2 days ago, and you will see I'm typing. You will see this live happening right in front of you. Okay. The thing is, you have to be patient and you have to follow the rules. Not every trade is going to be a home run. As long as you manage, we have losses, we have stop outs, but that's okay. It's part of the deal. When you learn, one second, let me stop this. When you learn how to pick trades, pick trades. What do I mean by pick trades? I don't mean picking any trades. I mean, you know ahead of time if the trade has a 50% chance or 80% chance. You know ahead of time because you're following a rule called anticipate. Most importantly, confirm, and then execute. Okay? So once you pick that 80% or 75% chance, your success rate is high. The number of trades that you do is less. All right, John, I know you have to go to work. I'm sorry, but that's okay. Join the trial, please. TheTraderInstitute.com, and you will get you'll get an email or something from Anna. So email us, join us. You can join us. You can decide for yourself. Let me know. So once you pick that 80%, you are doing okay. 50%, I don't touch it. Anything below 75%, I don't touch, folks. I don't even call it. You saw me saying there's a chance to go long, and there's a chance to go short. There's a chance to do this. There's a chance to do that. All that is anticipation. You need to confirm, and confirmation comes simply from, look at this. Stop loss and this RTY, and usually my stop loss is announced ahead of time. How many traders will tell you the stop loss is established ahead of their entry? Not many. With this volume profile, you are going to be able to find your stop loss ahead of time. Okay? And you'll be able to trade comfortably better because you know ahead of time stop loss. Now, here's another thing I want you to pay attention to. Where is it? Where is it? Right here. Remember we talked about this. I have 4 minutes left. Anna will provide a PDF so it has all the information you need. Remember we talked about this. I'll go back and show you. Remember we said our stop loss is going to be the green. So your stop loss is green. So ahead of time, you know your stop loss. Imagine if you are trading with 30 tick stops, and all of a sudden, because of this, you minimized it to, let's say, 15 ticks. That is 15 ticks less risk for you. So if you had, let's say, losses, let me grab something here, folks. Hold on. If you have losses, let's say, twice a day, 15 ticks. You saved 15 ticks times 2, that is 30 ticks, times 5 days a week, that's 150 ticks, times 52 weeks, that is 7,800 ticks. Let's say you're trading with $5 a tick, times 5, $39,000 in saving, just from this fact, just because you know your stop loss ahead of time. Okay? I am done. If you guys have any questions or more questions, please let me know. And I really appreciate the opportunity. Hopefully the recording will be ready or distributed to everybody sometimes this week. Any questions? In terms of payment plans, yes. In terms of depending on the negotiation, everything is negotiable. I don't do selling myself. My sales manager will maybe probably take care of it, but everything is possible. The idea is for you to join and like the system first. Okay. Okay, I want to let the other presenter get ready, and thanks everybody.
Jousef, I love him. You know, anybody that follows volume is starting off on the right foot and then some. Paying attention to where the money, the big investments, the big commitments are going. So I always love to hear Simon present. I'm going to do something a little bit different today. And again, thank you for having me, Anna. I always start by saying we're going to do something different. So maybe it's the same as last time, but there are, it looks like there's 100 people listening to me right here. And but the statistics tell me that there are 90 of you that are unsuccessful in your trading. And that is something that is part and parcel to your, according to what I've discovered over my 40 years of coaching and helping traders succeed, it starts with mental and emotional capabilities. And actually, I did see a flash of a slide that Jousef had that talked about, had a woman holding her head in disgust about and the importance of the mental and emotional. But when you're dealing with 45 minutes, you can't explain everything that you see right there. And Jousef was on a roll. The thing is that without paying attention to the mental and emotional component of your trading, my guess, and it's a pretty good guess, is you're not going to get very far. And I'm going to show you a little bit of proof today, but I'm also going to show you the answers. The title of this presentation is Hesitating to Pull the Trigger as a Question. I'm going to show you the causes and the cure. And there's a reason that I chose hesitating to pull the trigger, and I'm going to get to that in a second during the presentation. If you don't know who I am, I always put 39 years because 41 sounds like I'm an old man, and I'm not. I played 3 sets of tennis this morning in 90-degree heat. Well, it was probably 82, and I do that a few times a week, and then I go to the gym. So I may be on in years, but I plan to go to 150, and I think it's another discussion that we can have to show you how I plan to do that. But I've written several books. The most well-known are the books that I've written on how to construct trading plans and design trading plans. And they come from a different place. Because it's me writing it, it starts with all about self-analysis before you decide which trading plan you're going to take. You'll listen to a number of great speakers today. Sunny is terrific after me, so you need to stay for her. But none of these, I'm going to call them gurus, and I'll throw myself in that category just for argument's sake. It's not, everybody's winning but you. So what's going on? Why does everybody have these great systems and and showing you proof on how they work, and then the tail end is if only you can get out of your own way and follow it without second guessing and fear and so on. So we're going to cover that today, and I contend that this is the most important 45 minutes that you'll spend today. I worked for Payne Weber, and I was actually hired as a futures specialist for them. This was already 30 years ago. After I finished running one of the largest option firms in the country, International Trade, they picked me up as a free agent. And so I've seen it from the back end, and I've seen it from the front end. I've seen salespeople selling you, and I've seen managers and how they run money. I was one of them. I had the Hallett group. I couldn't think of a better name, so I used my own, where I managed millions for substantial people who were qualified investors. I even, to preserve a little bit more money, I ran it through my own introducing broker so that I got a little bit off every trade that I was running for those people. So, but my most important phase of my life, the most important phase is the last 20 years where I've been helping traders with the mental and emotional issues of trading, because that is the difference between winning and losing. And I'm going to prove it to you right now. They say that 90% of traders lose money. Now, we've all heard it. And when I say traders, I don't care what it is, equities, futures, Forex, options, 90% of traders are losing money. The question is that true? Well, if you spend a day and a half totally, 12 hours, you may not be able to come up with what I'm pretty good at sleuthing the internet, and all I could come up with were 4 studies that address this issue. The one in 1999 was done by the North American Securities Administration Association, who is a network of securities regulators from US, Canada, and Mexico. The other I found was a European conglomerate. They're actually the European Securities and Markets Authority, an independent European Union authority that contributes to the safeguarding and stability of the financial system and enhancing the protection of investors like you and me, promoting stable and orderly financial markets. That's a mouthful. And I found where Spain, more specifically, did something that I think you're going to find very interesting in their country. What they are, and this is a law that they instituted based on what they discovered. And there was a Brazilian study, which I think could be the most relevant, because they looked at day traders that had accounts at least 300 days old. And that was not delineated in some of these other studies. I mean, if somebody opens an account, makes a profit, then closes it, I don't consider that a successful trader. I want to see what happens over time. And this Brazilian stock exchange study did that. Now, the Brazilian stock exchange is a wild place to be. So I'm not putting all of my cards on it, but it is consistent with what some of these other more accepted institutions, Fernando, Rodrigo, Bruno, these are all top traders who put their own study together. And just really quickly, I'm just going to go through them one at a time. This is the one from the North American group. And as if you look here, I'm not going to show you the whole study. You can look them up yourself. Independent analysis finds that at least 70% of traders lose money, and only 11.5% might profitably trade. Now, when I read this, I said, where's the other 18.5%? And after reading through the report, a 46-page report, so I think the difference here are people who they weren't quite sure, and they kind of called them a push. They didn't make money or lose money. And in my opinion, I don't know how you feel about it, but that's worse than losing money. If I lose money in a trade, I want to lose it quickly so that I can get to the next trade. If I'm not successful as a trader in what I'm doing, the way I'm doing it, I want to know in a week. I don't want to know in 2 years. And I certainly don't want to repeat the same mistake over and over again. So it's even worse. That's probably why they didn't mention it. But 11.5, and the bottom line is only 11.5% of sample evidence the ability to conduct profitable. So that's pretty close. That's 88.5%. Here's the one done through Europe. And they actually looked at, it's a little bit more modern, a few years ago. They looked at different firms specifically and asked them to contribute their findings. So this was a little bit cherry picked. I don't know what to conclude other than it seemed to satisfy these European regulators, as I read to you, that are out for our success. But these may look great, but this is only the first half. This is the second half. Here's a couple of firms where 85% lose, but the average was 76.3%. So they say that almost 1 out of 4 makes money. I don't know. This was a cherry-picked stat. I'm going to keep going. This is the Spanish National Securities Market Commission resolution done a couple of years ago. This is based on what they had covered. First of all, they outlawed, this is the law based on what they discovered when they went into transactional firms. First thing they did was they outlawed binary options because nobody was winning. And this, binary options weren't around a long time in 2019. I think people have gotten better at it, but that's the first thing they did. But the second thing they did was when you advertise, when Spanish firms advertise their wares and how to trade and join them and try to take their trials, whatever, they must state that between 74 and 89. Now, originally it was 89%, but the powers that be lobbied for this range. So, but even if you abbreviate the standard risk warning on any advertising that you do, you must put in bold that 74 to 89% of retail investors lose money. Now, trading CFDs, which are certificates for anything that's settled. At the end of the day, anything that's settled, like a stock or anything that has an open and a closed contract. So it's all the things that we're talking about. I think closed something deposits, whatever. Sorry. But I'm not European. But I just wanted to show you. Now, I'm just going to go with the 89% here. And this right here is the Brazilian study that shows that right here it says only 1.1%. They found that 97% of all investors who persisted for more than 300 days lost money. So only 3%, and only 1.1% earn more than the Brazilian minimum wage, and 0.5% earn more than the initial salary of a bank teller in Brazil, which is about $50,000 US, all with great risk. In other words, they were stressed the whole time, but at least they won. I guess they meant by that. I love the fact that they threw that in there. But I found it interesting. They took a look at this chart. This was 19,000 traders that they analyzed from transactional firms. And of those that persisted more equal to or greater than 300 days were 1,500 of them, 1,551. 3% of them made money. That's 47 trade. And of those 47 trade, this is a chart of, this is the daily net profit average, and this is the daily net profit standard deviation. Don't worry about it too much, except for to say that the cluster here, it almost looks like a basketball analysis, but the cluster here, this has made money. The majority of those 47 traders made very little money. And this is the line for minimum wage, which is what, $14 or something? What does it say here? $16 a day. And the bank teller, so only 1, 2, 3, 4, 5, 6, 7, 8 traders made more than a bank teller out of 19,000. Well, let's go with 1,500 of those that lasted more than 300 days. And so this is a 97%. So I'm going to say that 90% of traders lose money. And I'm going to also guess that those on this call, 9 out of 10 of you are losing money. And that's okay, because that can change. But it's going to take commitment from you. It's not going to take another guru to tell you where to buy and sell. Most people know that most traders lose money. So I'm going to ask you this question. This is really the only one I'm going to ask you in the chat. So my question to you is, why is trading so popular? With the knowledge, and I think people have heard that 90% win. Why do you believe, put it in the questions, I think that's the, why do you believe that people go on knowing that most people are going to lose? I'm going to, I see the dream. Okay, I'm going to, since we're a little bit limited in time, I'm going to just go right after the answers for you. Not that, and this is not coming from me, it's coming from having polled over the years my traders. Reason number one, why we all keep banging at the door even though we keep blowing out accounts, and that is, there's really very little regulation when it comes to advertising. As long as you use the words like can, this can be you, and phrases like it's impossible to, it's possible to triple your money in 2 weeks. I mean, you hear it all the time. Now, that would not be the case with the responsible traders that are on this call and all the people that Anna's ever gathered that I've seen, but they're out there. And somehow that lends to the, and sometimes, and then when you go to a more responsible trader, somehow you still remember all those dream things that can change your life in a day. Plus, there's a boilerplate. I mentioned that I ran one of the largest option firms in the country. Next door, in the next office was Fred. He was the attorney for the company, and that we had 15 offices. I ran the home office, and you know, we made everybody put the boilerplate disclaimer somewhere in the end, and it went something like futures trading is risky and only risk capital should be used. Past performance is not indicative of past results. Past performance is not indicative of future results. Only risk money capital should be used. I mean, I can say it in my sleep, and you've seen it a million times, but somehow that's supposed to be comforting. So they can, as long as they're using can and it's possible, they can say anything they want. Okay, you're good. The second reason is that trading systems and trading plans and the trader, him or herself, and I'm trying to get to the modern version of traders themselves, they don't match. Firms that sell trading systems and trading plans are good at one thing, educating you on running their systems. Let's call them gurus. They don't know you, your personal strengths and weaknesses, and if the plan is right for you. Everybody is selling a one-size-fits-all. If you can learn this system and do it the way they're telling you, then you're going to make money, okay? The truth is, every trader is a little bit different. I've worked with hundreds one-on-one over the years. If not maybe not 1,000, hundreds. Every trader is a little bit different, and the trading plan needs to match that particular trader. Case in point, a slightly ADD trader who lacks patience should likely not be trading a plan that requires waiting for certain criteria to fall into place. he or she may be better fit in a plan that has frequent signals. That's me. I want a trading plan that I stay in, that gives me opportunities all the time. I'm not a guy, even though I am a person, I'm a big person waiting for confirmation, as Jousef was saying before me. I want a system that shows me that confirmation quickly so I can get into a trade. Because I'm not super ADD, but I'm slightly. So I was kind of describing myself here and looking back at plans in the beginning that didn't work for me. It was ones that involved the line crossing another and two averages and the volume being there and the RSI falling into place. I can't trade it. Even they may make money on it. I'm not going to, because it doesn't match me as a person. A trader who is a person who usually is cautious, like my accountant, okay? He's every time I walk in, he's trading. Talk about my taxes, he's trading. He'd be best served by a trading system that has several confirming hoops to jump before they initiate a trade, similar to the one I told you that I couldn't deal with, okay? And then, of course, there's the trader whose father was a gambler, okay, or mishandled money, and so his family's finances obliterated. They may be best served by a trading plan that keeps trading losses to a very low maximum. So what I'm getting to here is that we need to take responsibility for finding a trading plan that fits us, and it starts with analyzing who we are, taking trials like Jousef mentions, and I'm sure Sunny may have a trial, but that's the great part about trials. You know, you can see whether it kind of fits you or not, okay? So utilize them when you can, but understand that there is no one size that fits all trading system, okay? And the third reason is that the industry is complicit in what I call the hopping game. We've already established that vast majority of traders lose. There's no, it's true no matter how good the trading system is. You've all probably owned now several trading systems that would work for you, but you're still losing. So the truth is, no matter how good the trading system is, that's kind of not what it's about. 90% of traders are losing because there are two necessary components to winning trading: a valid trading plan, which reputable gurus do supply us, and the ability of the trader mentally and emotionally to follow that plan, which they do not supply. Okay, gurus are good at teaching you how to run their trading plan system, period. That's it. Okay, they'll tell you, they'll give you advice, or may even have a video on how important it is to follow the plan and follow the rules and how important rules are, but they're not giving you the tools to change your mentality and make it actually happen. Although responsible firms give you the mention of an importance of the management of mental and emotional to succeed in trading, the articles, it's not enough to turn destructive behavior, okay, to supportive behavior. It's just not their field of expertise. So you continue to lose with their best wishes. The guru wishes you the best, but you continue to lose. Rather than encouraging traders to do the inner work, which, to the guru's defense, most traders don't want to even hear about it. Their egos get in the way of that. And it's not the guru's expertise anyway. Here's what's happening. When a trader loses 90% will, I've proven that to you, they will look for another holy grail because of the bombardment of advertising that keeps their dream alive. Gurus know this, and they understand this. Okay, and it can lead to cross promoting. For marketers, from a marketing standpoint, we all build lists of potential buyers. Okay, all of us have them as gurus. For those who don't buy our system, okay, many gurus will promote somebody else's system and grab a commission for the referral on that sale. And there's nothing wrong with that. Okay, and I was shocked. I'm kind of like type O blood for everybody. My focus is not necessarily where trading plans, although we have something called simple trading plans for those that don't have a trading plan. But our focus is helping you with the mental and emotional part, which nobody does. Nobody wants to get into because most traders don't want it, and gurus have no idea how to do it. Okay, and well, whatever. I won't get. And there's nothing wrong with grabbing a commission. You know, I saw a Forex trader advertising another Forex trader. I said, why would they do that? Well, it's because they're getting a 30% commission and they weren't successful in selling their own. They have a name. They might as well get credit for referring it. And that's how the business works. And if you think about it, the trader who finds his or her way to profitability is making money and content. And they stop buying. Those 10% that are profitable, they stop buying. So in the end, it serves the industry. It serves the industry that you don't win. Not that they're wishing it, but in a way it serves them. And you keep hopping from trading system to trading system, and you keep buying. It's like replacement razor blades. I always hate when I pay $30 for 16 razor blades. Let me be clear. I'm not saying that gurus don't want you to win. I know hundreds of them, and I know them personally, and I can safely say they honestly do want you to win. But the industry is not set up like that because the industry de-emphasizes the requirement of mental and emotional management to succeed. It's the trader, it's you who doesn't want to face the truth. So why should the gurus emphasize it? So where does this leave us all? Let's see where I am in time. I guess I have about I'm about halfway through. So where does that leave us? What do we know? That the industry is set up to make you keep buying trading systems and plans, but it doesn't set you up to actually have you win. I think I've shown you that. Only 10% of traders make money. I've proven that. Now, what don't you know? You may not know this, but I know this. And only 10% of traders do anything at all to improve their mental focus and emotional control, their emotional capabilities. You are capable of being a winning trader. I'm going to say that to the 90% of you that have never won at this, they're banging your head against the wall, blowing out accounts. You can do this, but you have to concentrate on yourself. You have to analyze yourself. You have to get a matching trading plan, but mostly you have to start to train your mind to exercise your positive mental and emotional capabilities. Okay, the truth is that, and this is the other way of looking at it, that statistic that 90% of traders do nothing about the mental and emotional capabilities is directly responsible for the other statistic that 90% of traders lose. I really hope I've shown you that. I would grab your shoulders right now and I would shake you if I was there, because this is the answer. This is the key. Okay, the bottom line is the ball is now in your court. It hasn't been maybe up to now. It's not your fault. Now it's your fault. No, I'm not, listen, you have the capability, you have the desire, wherever you've gotten it from the crazy advertising, you have the desire, you know that 10% are winning. Now you got to do something about turning it around. If you're ever going to put the odds of winning in your favor, you'll need to include a process of managing your mental and emotional capabilities. Okay, so I pose a question to you. What is your primary thought or emotion? So I posed this already. I'm not posing it to you now. We're getting to the topic here that we're discussing. This is all leading up to what is your primary thought or emotion that has you trade in a way that compromises or hampers your trading success. And I gave it as a multiple choice. I had several hundred answers, and there was only a 1 or 2, there's 2 or 3% difference between 1 and 4, and it was fear of losing. It was lack of patience. But the winner was hesitating to pull the trigger by a nose. Okay, so that's what we're going to approach today. Now, and it won't take much to approach it really, because there are a few forms of it. Okay, one form is hesitating to initiate a trade. Okay, when you do that, you watch the trade go, and then you chase the trade. Okay, by chasing the trade, you're increasing your risk while reducing your profitability capabilities. So very bad, chasing trades. And not only that, when you don't chase the trade and you somehow hold it against the market or yourself or somebody else or your dog, you may want a revenge trade after that. I got to take the next trade. I got to take the next trade to kind of revenge yourself. Another form is hesitating to place the initial stop. Now, if you do that on Simon's system, you're not going to be around for long, okay? Because, as all good trading plans, I believe, responsible trading plans, you should have a set place to put your stop and a way as the trade matures to limit those stops. And I think Jousef showed you both that he's in tune with that, and that's That's why I respect him and Sunny, who follows me. They both, listen, any good guru is going to understand that you need to place your initial stop. But somehow traders may have a problem with that because they just got stopped out and they want to, they thought, you know, it's a very short stop. Maybe I'll give it a little bit more room because there's this other low that was tested just before that. I can give it a little bit more room and I don't want to get stopped out like I did the last time. Whatever it is, you hesitate to place the initial stop, and that causes problems, larger losses. Hesitating to manage the stop according to your trading plan. All of this is according to your trading plan. Hesitating to manage the stop according to plan, and hesitating to exit the trade. Okay, you have, and this, I see this all the time with swing traders, where they see a monster move and in their favor, knowing, and they see that the RSI is tapping the top of the chart, and you know, is crossing 85, 90, 92, and somehow they think this still is the answer to the dream, where the trading plan tells them, when you get a move like this, take a profit. One of the things, I'll give you a tip, if you find yourself in that trap, well, I got you. Trade multiple positions, at least two, okay? And you can do that if you're trading micro, mini. You can do that in a $5,000 account with micro, mini goals. But you can do it with 10 shares in a very small stock account and treat it as 5 and 5. The idea is to take short profits, let the other one run, and so that it gives you, it allows you some flexibility to do the right thing. And once you start to do the right thing and do the wrong thing with the other trade, you're going to wind up doing the right thing with that trade too. So I probably shouldn't have told you that tip, because that's kind of a convoluted version of it. But my point here in this presentation is hesitating to exit the trade. I mean, you know how that can kill you, okay? And all of this is caused by fear, okay? Fear, and because your mental and emotional stability and capabilities, it's like an onion. Once you peel one away, there's another fear level and another fear level that's caused by something else that you experienced as a trader or in life. So it's important that you understand that even the fear, the hesitation to pull the trigger in any of its forms, can be related to the fear of losing, because this is the first trade of your 5th account. You just blew out the last 4 of them. So you need to continue to analyze and put out first you put out the fire. Okay, the fire is the hesitation to pull the trigger. Then other things will come up. These are the smoldering problems that can become fires if you don't pull it. And there's a way to do that so that you can take control of your mental and emotional capabilities. Okay, and it's all about your subconscious mind. And I thought I switched this this graphic because this is telling you that one third of your mind is the conscious mind, and 2/3, it's really 90% and 10%. What you do, how you act, is a function of what your subconscious mind believes is true for you. Your conscious mind is the one you hear, you talk to, you're discussing it all the time, and should I take this trade, should I not, and let's pull, you know. But whether you do or not, I can tell whether you have poor behavioral habits, not by how you tell me, what you tell me, but how you act, because how you act is controlled by your subconscious mind. Here's what goes on. And I suggest, and we have it for you, I'm going to show you them, short meditations that you can take on a daily basis. And even if you only take these, we have prescribed 7 to 10 minute meditations that you take on these particular topics. If you just do them once a day before you start trading for a couple of weeks, that's all it takes to turn a detrimental behavior to one that's supportive for you, so that you'll be taking trades without hesitating. You'll be taking with confidence. Okay, a thought creates a neural pathway. This is a picture. These are neural pathways. These are energy pathways that carry thoughts, okay? By slipping into an alpha brainwave state, you can direct specific thoughts and create specific neural pathways. So these can be random thoughts, like Jim Cramer telling you that the stock that you're long in now has a poor future and that you should be bailing, even though your system tells you to stay in. So, you know, you're creating neural pathways that are doubting your position here. And here's another one that the last time Jim said something, I was right. Here's another one that, boy, you know, Jim's not the only one. I read something the other day that the entire sector is under pressure. And so all of these are creating a neural net right here that will control what you actually do. So if you feed it the wrong material, you're creating a neural net that will not serve you. So by slipping into an alpha brainwave state, you can actually direct specific thoughts and create specific neural pathways that do serve you. I am a wise and disciplined trader. I do the things that a wise and disciplined trader does. I understand that when my trading plan, my tested, proven, positive trading plan tells me to take a trade, I take it without hesitation. I know that some trades will win and some trades will lose, and as a disciplined and responsible trader, I know that this is all part of the end game of winning. Winning and losing in trading arrives in the same positive conclusion. So I pull the trigger without hesitation. And my wife is much better. You'll hear her voice on these. She is a professional. She is the trainer's trader, trainer's trainer. She has trained other therapists in subconscious training to say the right things so that these neural pathways have the kind of energy. And we have, for the last, I've told you, 15, 20 years, have created these suggestions specifically for traders. So these 8, 9, 10 minute, some of them are 7 minute meditations are specific to you. Okay, if you have enough of these neural pathways created, you'll create a new neural net that will supersede this old neural net. This way, when you get the trade, your system tells you you get the stimulus response, you get the stimulus to take the trade, you take it without hesitation, because now you're operating from a dominant neural net. Right now, you're operating from a neural net and this group of neural nets that are not serving you. And that's why you keep on doing the wrong thing. And that's why you keep blowing out accounts. This is a simple procedure. Now, I have a math degree, and I was the last one to think you can close your eyes and create this stuff. It's true. And so I've looked up the science, and I've given you a little bit of the science here. So my question to you is, how long have you been a struggling trader? Okay, ask yourself, how long have I been struggling to do this? As I mentioned before, struggling at break even could be the worst thing, because you could have been working for a charity and doing some good in the world instead of beating your head against the wall for nothing. Okay, I'd rather lose and learn to correct and have a little bit more pain. How many accounts have you blown out? Now, I know the answer to that is, and the majority have blown out more than 2 accounts. I did a poll one time, and I could not believe that 40% of the people who was taking our courses, and we had hundreds of thousands, maybe 1,500 at the time, more than 4 or more accounts they had blown out. 40%, and another 28% blew out 3 accounts. So I know you're blowing out accounts. Okay, so I'm asking you, are you insane? According to Einstein, and you know what he said, if you keep doing the same thing and looking for a different outcome, you're insane. You don't have to be insane. I know you're not insane. You've been misled. You've been as my mother used to say, you're putting the emphasis on the wrong syllable. You're putting the emphasis on the wrong thing. Okay, you must first strengthen your mental and emotional capabilities, and then you can run any trading plan that fits you. And I've mentioned that to you. Okay, I want you to write this down. And Anna, if you would just, because I only have about 10 minutes left, and I just want to make sure that you have this. And I'm going to go to this site right now so that you can see exactly what you get when you get here, because I'm going to make my offer to you right now, and there's no reason why you shouldn't invest in yourself $397 for the next year of support. That is that we are the best at this. We may be the only one doing this to the extent that we do it. Okay, I'm going to show you right now what that's. If you go to thedisciplinedtrader.com, you will end up here, okay? You won't end up with the flashing signal, but you'll end up at our website, which is thedisciplinedtrader.com, okay? And if you scroll down, it's kind of a cool website. You can kind of look at it. And we have here, the first thing I want you to do, go ahead and opt in and get my 4-minute drills. That's free stuff. But this is where I want you to go. I want you to go to thedisciplinedtrader.com, and then I want you to click on this, change. And when you click on this, you're going to arrive right here. And it's going to ask you, it's going to command that you stop blowing out accounts. Again, it's on you now, okay? And it's okay, because it was on me before. I blew out more accounts than I just told you. I probably blew out 7 or 8 accounts before I got it right, before I married the subconscious trainer, who said, why do you keep blowing out accounts? You're a good trader, but somehow you can't follow your own damn system. So why don't you let me help you? Well, in 2 weeks, I have not looked back. Okay, so when you go to thedisciplinedtrader.com and you click on change, you're going to arrive here. And by arriving here, you're going to, this is a 9-minute video. This is a tour of the site where I kind of show you what you get as far as all the elements of this mental change, okay? And this is really the do-it-yourself. We have, if you have a large account, if you have an account of say 100,000 or more, or even if we have several of our people that manage other people's accounts in their retirement accounts and so on. If you're one of these people, you want to consider having our one-on-one offer, because right now we're making an offer for one-on-one for $2,000. You can have an unlimited number of coaching sessions with Tisha and I for a year. And well, not only will we help you do individualized sessions for you on the subconscious trainings, but there are other modalities that we use. And if you're interested in that, I just want to mention it to you because we do have the special going on, but it's only for my list members. When you get here, okay, go to contact. Okay, when you get to the Disciplined Trader, go to contact. And what you'll see in contact is here. Just fill this out and say, hey, I'm interested in the one-on-one unlimited number of sessions, one-on-one training, and I'll get back to you. I'll send you the material on that. I won't call you and bug you, but I'll direct you to the material on that. But again, you want to go here to thedisciplinedtrader.com, and then you want to click on change. And when you do, you're going to wind up here. Okay, so here is again a video on it, and that's a little bit about me. It's been a long time since I've worn a suit, but you know about me. Here's people bragging about what we do, and this is what you get. In fact, you get 200 of my 4-minute drill for traders. This is what put me on the map years ago, where I kind of hit you, just like I've been hitting you between the eyes here. Hopefully, I hit you in the eyes in little 4-minute segments about trading. Things that you may be forgetting that you need to focus on. Are you journaling, for instance? I'm going to grab you by the shoulders again and shake you, because if you're not journaling, you're not doing the self-analysis really that can keep you on track. Okay, there's other tips and tricks that I have that really, and Tisha's taught me most of them. I've learned from other traders that are doing things. We just have a wealth of information, but these you have 203 of them that you can kind of motivate yourself with. You get the core modules. This is where those mental trainings, those subconscious trainings reside, specifically for traders. And then there is 79 lifestyle. When we change your trading life, and all of a sudden you're a patient trader instead of one that is impatient and gets into trades early, or in the case of this presentation, if you're a trader who is hesitating to pull the trigger, and all of a sudden you're pulling it with ease and confidence, then you start saying, is there any other part of my life that you have meditations for? And we do. We have 7. Over the years, before we specifically went for traders, if you're a golfer, we have meditations for you as golfers and tennis players. They're still being used by a lot of the pros right now. Our meditations for golf and tennis. So we give you access to all of that too, and salespeople and all kinds of things that we do. There's even a basic series if you're not an experienced trader on trade management and so on. But most of you may not need the basics. You're going to go straight to the mental trainings, these 7-minute trainings. And then we've got bonus materials, and we have a private Facebook group. In any event, $397. Okay, it works out to $33 a month. It's important. I should make it $3,000 a month because that's how important it is. And we give you a guarantee. Okay, if after utilizing the material for 60 days, okay, if you don't think that it's helping you, okay, I'll give you the $397 back. Okay, here's some frequently asked questions and so on. Here's a breakdown of some of the things that I just talked about. If you want to read a little bit about that, I didn't want to make this sales letter that you're looking at too long. I just put in this section because I was getting questions about it. But here's some questions that are frequently asked. But and here's a conglomerate, kind of a potpourri of people who we've helped in the past over the years. It's a 4-minute video that just, again, that brags about that. But it's not about them, and it's not about the guru who tells you you can. It's about you. It's about you and your situation as a trader who has the capability, but you're running on neural pathways that are not serving you. Okay, and so here's where you fill out everything and hit the button. I'm also, if you're not journaling, we used to sell this for $129. I don't sell it anymore, but I still have about 30 of them in my garage. These are beautiful leather bound, if you're not journaling, gold leaf, whatever, for $49. You can add it to your order if you want. I just threw it on here in case you're not journaling. This will inspire you to journal because it's a beautiful journal. You can add that, but $397, okay, for a full year of access to the Disciplined Trader Mastery Program.
Good morning, everyone. I'm Sunny, and Norman, thank you so much for that generous and really sweet introduction. I really appreciate it. And maybe I should sign up for some Norman coaching too, because everybody needs a coach. Everybody that's good needs a coach. The best ball players, the best physicians, the best, everybody needs a coach. It not only keeps you honest, but it really sets your path straight and lets you really achieve something to your maximum potential. So today we're going to talk about trading real time with SunnyBands. And there's my theme song. So I'm going to tell you how I actually trade with SunnyBands this morning. I've been asked many times to show exactly how I use my indicators to trade, but I've never actually done it with real trading. Well, I did on my YouTube videos, but that's a long time ago. And today I'm going to show you how it actually happens. So this is the webinar you've asked for, and I use SunnyBands and my DMAH indicators, and that's really all I use. You'll see some other things on the chart, but I primarily take all my signals from these two indicators, and that's it. So we're going to see the nuances of trading, actual trading also. This is important. What this says, and I highlighted things in red that are really important, but it basically says that you might lose more than you put into the market, and so be really careful that you only trade with risk capital. So just real quick, I'm going to tell you who I am. I've tried to cut this down, but if you want to know more, go to moneymentor.com, which is my website, and it says there all of a lot of the things that I've done. So I was #1 trader a couple of times, and I was using SunnyBands in my DMA to do it, the dynamic moving average. You can see right at the top, there I am. And I have degrees in mathematics, like Norm does. Thank you, Norm. And another little degree in photography and half a degree in computer science. I've been programming for 52 years. I've been trading for 40 years. I was as a systems programmer for Lockheed. That's the first real job I ever had. I founded with a couple of guys, founded a little company called ISCO, and we became the world's leader in computer graphics software. That was in the early 70s. I retired from that company when I was 30, sold my stock and got a lot of money out of it. I gave money to money managers, which I found out was a bad idea, but I didn't know at that time. I didn't know anything about trading, didn't know anything about finance. I just knew a lot about programming and managing programmers. So I gave $75,000 to the money manager, and they wanted to trade futures for me. And they told me that if they traded futures, they'd make my millions into double it. They're going to make multiple millions for me. It took them 3 weeks to lose $75,000. And so, of course, they wanted to have more money so that they could continue trading futures. And I gave them 50,000 more, and they lost that in another 3 weeks. So that's a lot of money. Even back in the 1980s, it was a lot of money. So I decided I would teach myself to trade. And I've read, at that time, I read 117 books. Now I've read over 400. And that just counts the trading books. That doesn't count the stuff I read for fun. And I did not enter a single trade for the first year of watching the market. I thought that was best to, you know, when you're jumping rope, somebody else is turning the rope when you're jumping, and you do your hands up in front of you and you're like, okay, when am I going to jump in without tripping? That's what learning to trade is like. You have to get the rhythm of it. You have to get the rhythm of the markets. You have to get the rhythm of your trading ideas, which probably aren't a system yet when you first began. And so I created a magazine that was called Trader's Catalog and Resource Guide. That was the collection of my little black book of everything that I was learning along the way. And I published this thing for 8 years, largely out of my own trading profits, because I never managed to sell enough ads to have it actually pay for itself. But it was fun, and I learned a lot while I was doing it. So primarily, well, almost exclusively, I'm a trader. That's what I do. That's what I love. I've been doing it for a long time. I trade futures, stocks, ETFs, and crypto. Don't bother with mutual funds anymore. I used to. I used to trade municipal bonds. I had millions of dollars in munis. But the one thing I do not do is trade options. Sorry, guys, but I don't know how to do anything but lose money with options, so I don't do it. Here's a look at where Bitcoin was last night. And let's see if no, I don't have the arrow in there. So this is Bitcoin last night. But you can see down here, see the purple and gold vertical bars at the bottom. You can see that right here at this green bar, at this green bar right here was where the long signal was given for Bitcoin on a daily chart. Right there where that blue dot is, that's where we went long Bitcoin. And up, up, up. Ethereum, same thing. Green line came in right here at this blue bar, and it's been going up ever since. The other thing I want to point out is my dynamic moving average is the purple moving average and the gold moving average. That's my dynamic moving average. And I'll tell you more about that in a little bit. But that is the basis for my SunnyBands, which is the green and teal on the bottom, green and teal on the top. And that's these two things. That's what I do. I trade these two things. Trading when you're doing it right is boring. Let's do this real quick. And I write a newsletter on Sunday nights called The Sunny Side of the Street. And I put a vantage point prediction, pardon me, on there. And then I put stocks and bonds and gold and futures predictions. And you'll see here, this is the vantage point prediction. That was last week. Look what happened on Monday. This gray bar is them predicting what was going to happen on Monday before it ever happened. Let's see if I can turn that on. Okay. The newsletter, the Sunday night newsletter, is free for charter members. So I'm taking charter memberships now. When I get to 100, I'm going to start charging, or the price will begin $29 a month starting on my birthday. Okay, so we're going to charge a little bit for it, and it will get more expensive as time goes on. Like, I'm limiting the number of people who will be able to have a membership to the Sunny Side of the Street. So if you want to sign up now, it's free. We do predictions and analysis. I use SunnyBands and the DMAH. You can see exactly how I use them. I'll tell you exactly what the signals are. The problem is, pardon me, that it's only on Sunday nights. So, I mean, you can get a clue what to do on Monday through Friday, but the real signals are going to come straight out of my TradeStation software for people who want signals live. So I do analyze the Dow, the E-mini, crypto, gold, bonds, and select stocks. I did a couple of mutual funds last Sunday night because one of the readers of Sunny Side of the Street said they wanted to see what their mutual funds look like. So we did that, and that's always fun. If you click on subscribe here, when you get the recording, it'll take you straight into the Sunny Side of the Street sign up. So you can go to moneymentor.com, which is my website. It's been up since 1995. Click on books and articles, pull down to Sunny Side of the Street, and you'll see there how to sign up for it. Remember, for now, it's free, and if you're a charter member, you don't ever get charged. These are the books that I've written. Going Vegan with my friend Linda Blair. I'm sure you all saw The Exorcist, right? And I've been asking, what shall I write next? And I've gotten the answer. I've given enough presentations and enough people have voted. So I am now actively writing, Easy Language, OOEL, Made Easy, which stands for Object-Oriented Easy Language. And there we go. I'm writing it with a friend of mine, Samuel K. Tinnis. Sam is the guy that wrote Easy Language in the first place. He wrote System Writer and System Writer Plus and Easy Language. So he's the ideal person to be writing this book with. The cool thing is I don't know OOEL yet. I'm learning because every Tuesday and Thursday, Sam spends an hour or two with me teaching me. As he's teaching me, I'm writing the book. And so I will be proficient by the end of the book. And hopefully by the time you read it, you will be too. The idea is just to make it really easy to use. Here's you see down at the right-hand side next to last menu is quips. These are quips and quotes. These are hundreds of comments that people have sent to me, emailed me on their comments about SunnyBands and the book and my consulting and all kinds of things. So see what other people say. Okay, what I trade. S&P 500 futures contract. 1 and 5-minute charts. That's really fast. That's not a daily chart. It's a 1 minute. I've got an overlay of a 5-minute chart on top of that so that I can see exactly what the market's doing minute by minute. And it's really fast. But I love it. I do have long-term stock holdings where I hold for a week or more. I've got some that I've been holding now for about 6 months, in fact, which to me is very, very long-term. I trade ETFs long-term, like primarily the SPY, but there are more. And I trade a little bit of crypto. I trade the S&P 500 E-mini because it has the most money-making potential of anything that I know. It's mathematical in nature. If you look at Stocks and Commodities magazine, it's all at the back. There's a futures liquidity table, and the E-mini is always right at the top. It's the most liquid. And the thing I say is don't buy something you can't sell. So, for instance, if you want to trade lumber because you know it's been inflationary during the COVID thing, so you can trade lumber, but you get to the place that you want to take your profits, and you may or may not find somebody to take the other side of that trade, or at least not without a whole lot of slippage, which is never fun. To me, specialization is important. You don't want to do scattershot because it doesn't work. So you just start picking a whole bunch of stocks and buying them and holding them for a few days. That just doesn't work. Even though all boats rise with the tide. So I think specialization is the way to go. You get really, really good at something and repeat it over and over again. Otherwise, you're going to be jumping from symbol to symbol on slippery rocks in the rapids. If the E-mini is too expensive for you, a lot of new traders would like to learn on, obviously the first thing you should do is simulated mode, so you're not trading any money at all. But then when you get good at that and you've got 6 weeks of profits to look at, then you want to go live, of course. And the E-mini micro is probably the way to start. So you tried the micro. It's a tenth the size of the E-mini. The E-mini moves in $12.50 increments, so every tick is $12.50. The micro moves in $1.25 increments. So that's pretty cool because you don't have to lose as much money right up front. A move of 1 point is just worth $5 in the micro. So that's really an easy way to learn. Margin in the micro is $1,200 versus $12,000 in the E-mini itself. This is a theme of mine. I don't want to be right. I just want to make money. That's the only reason to trade, is to make money. But most indicators and methods and teachers are about being right. Newsletters, writers, advisory service, they're all about being right. And in fact, they will tell you all the right calls that they made in the previous newsletter, or that last year when they bought XYZ stock for $3 and now it's $300. But the truth is, we all have drawdown. The object of this game is to have bigger wins than losses, and that's about it. All of us encounter choppy sideways markets, whipsaw I call it, and I decided to try to see years and years ago to see if there was something that I could do that would smooth out the whipsaws. Hang on one second. I had to turn off the air conditioner. So I created some sophisticated smoothing algorithms for flattening the whipsaw. Most moving averages that get in these periods that are marked in yellow here, where the market moves sideways, they'll get in that and you'll get a trade, and a trade, none of which will be winners. So I developed some mathematical algorithms that change automatically with the speed of the market. So dynamic means it's changing itself. You're not giving it different inputs and optimizing them. You're just letting it do its own thing. And that's my dynamic moving average. Take a look here. The purple and gold lines are the DMA, or the dynamic moving average. And if you look right here where this first yellow is, you'll see that the gold and the purple lines spread out. They don't cross over like most moving averages. They spread apart. That's to let the sideways happen without changing your position. Again, over here in this one, sideways, the averages stay apart. They don't cross over. And likewise in that. So of course it has losses. Everything has losses. But this one does better than any other moving average I've ever seen, including some of our gurus' moving averages that they call dynamic or adaptive. I added the bands to the DMA about a year after I figured out how to do the DMA. And I put it 1.2 and 2.0 average true ranges away from the dynamic moving average. Now, the reason I use ATRs, or average true ranges, instead of, what does John Bollinger use on his? He uses standard deviation. Standard deviation tells the market where it should go, and my average true ranges tell me where the market is going. There's a big difference. So there are the bands to that same chart you were looking at. These are the teal line on the inside top, green line on the outside top. Likewise on the bottom, teal on the inside is 1.2 and green on the outside is 2.0. You'll notice that it's not symmetrical because I use whatever line is on top to create the top band. So purple's on top, then I'm creating it with the purple. If gold's on top over here, I'm creating the band with the gold. So that's how that works. So this discovery led to something else. And that is what I do now. I measure the difference between the DMA gold and purple lines, and I look at the angle of the change between them. And I call this my dynamic moving average histogram, or you'll see me refer to it as DMA-H all the time. It's in 4 colors with signals. That's what you saw on crypto in the beginning. Same chart again. I've got a little red dot out here at the edge. I put a red dot on my red or green dot. It automatically changes, telling me where the closing price currently is. And you'll see down at the bottom, I'm going all the way to the left on the bottom. Green, 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 green means that this dynamic moving average is getting closer and closer together. When it turns green like that, at this level, is when I would go long, when it turned way back here. And the gold on top means the gold band, the gold DMA is on top. When it turns red, right under 2047 comma, it turns red. That's where I go short. So red means short, and green on the bottom means long. So as it turns, we get all kinds of good signals telling us exactly when things are turning. And I'm having a computer programmer program this thing for me, so I'm going to be able to offer it to you as a strategy in the near future, hopefully. This is the crypto chart. You can see right back here at this vertical line, that's where my DMAH called for going short. And over here, we always look for a higher high to go long. So right there is when we finally went long. You can trade anything with these two indicators. You can trade stocks. You can see the calls there. You can trade bonds. You can see that's where it called for short. Gold, right there, called for long on gold. And you might ask, how about my symbol? So these two indicators work on your symbol too. They work on any symbol and any time frame. You want to trade 1 minute like me, you can trade that all day long. If you want to trade daily charts because you have a day job and you want to come home at night and trade in the aftermarket, works just as well. Weekly, monthly, whatever. So now let's look for a second. I promised you some real-time trading. I'm going to show you what I recorded yesterday while I was trading. And we're going to have 45 seconds of what trading looks like in real life. Now, I want to say again, trading, when you're doing it right, is boring. That means you've got your system down, you've got all your ideas in place, you know where you're going to put your stops. Everything is predictable. So if it's predictable, it's boring. You just do the same thing over and over again many times. And I'm going to explain to you what I'm looking at as this chart goes by and what I'm doing. So here we have it. And you can hear the little sound. You hear that? Bing and bong. Bong means price is going down. Bing means price is going up. And I keep that on my chart so that if I happen to look down at my keyboard, I can still hear and tell where the market's going. Years and years ago, I used to have traders on the floor of the exchange in Chicago. I was trading the big boy at the time, which was $50,000 margin back then. And I love to call on the floor and say, let me listen just a minute. And I could hear all the screaming and yelling and waving of hands and gnashing of teeth. And it really helps to know where it's going. But you see here, we went short right back there, and you see the profit accumulating. So I let it go to about 250 and I took it, but I didn't keep recording because this was just it took a lot longer, and I'm not going to make you sit through more than 45 seconds of trading. But you can see there, I've got 1 minute data going along here, red and blue, and the dark green and teal is the inner SunnyBands on the 1 minute chart. Down at the bottom, I've got a 5 minute chart, 5 minute data on there, and the light green and cyan bands are the 5 minutes. So you can see the 1 minute SunnyBand trading within the 5 minute, and it's just beautiful the way it goes up. And the same signals come from the 1 minute being inside of the 5, and 5 is long term to me. Oh, it's going again. Let's see if I can go. There we go. Now comes the question: how much money can you make doing this? I don't know if everybody in here is a seasoned trader, or if I'm preaching to the choir, or if we have a lot of beginners. Do I have a chat room anywhere? Can I? No, that's not what I want to do. I was just wondering if anybody had any questions yet. That would be interesting. Anybody wants to chat? Okay, how much money do you have in your account? That's what you have to know. How much money can you make? Well, how much is in your account? If you have $5,000 in your account, you're going to make a different amount of money than if you have $500,000 in your account. Really good traders, and I'm talking the professionals, average about 30% per year. Yes, you'll see some that are making 100 and 150 and 300 and things like that. The first year that I was #1 trader, I made 365% that year. And it's not easy to do by any means, but if you average all the hedge fund managers that are reporting their trades, which I was at that time, then the average is about 30% per year. The average retail business, for instance, makes about 10% profit per year. And that's a lot of hard work. So if you had a $5,000 in your account and you made 10% profit, that's how much you're going to make. If you make 30% profit on 5,000, that's how much you're going to make. So you have to figure these things out. That's part of your business plan. That's part of what you tell yourself you're going to do, and you need to be able to present it to somebody else so that you actually will do what you say you're going to do. So if you're better than these, then maybe you can make more. So let's work backwards and see what we've got here. The scenarios are, you want to make $50 a day. These are your goals, okay? So $50 a day, $100 a day, 150, 200. How much is possible? We don't know. Those are goals, but you don't know yet. So let's look at that E-mini that I trade and ask how much is possible. First thing, I have an indicator called PHW. You can go to moneymentor.com and go either to the products page or the order form page. You don't have to order anything, but the order form shows you the prices, and the products page shows you the pictures. So I have an indicator called PHW, which used to stand for potential hourly wage. And the idea was, if you can't make more than minimum wage trading, you shouldn't be trading. Potential hourly wage is 60% of the ideal. So if I found every high and every low, every entry, and took 60% of that, then I should be able to figure out a way to make that. If you can't make more per hour than working McDonald's, you shouldn't be doing it. The PHW is, I used to do them in yellow, but now I do them in blue and red, so they point out the ideal turning points. No, those are not tradable. They show up 2 or 3 or 4 bars later. It's a research tool, not a trading tool. But I keep them on there because it keeps me honest. Did I enter the long trade at this point right here where it would have been ideal to do it? Did I exit up here where it was ideal? That's the reason I'm using them. You can also see at the bottom of this chart a regular RSI, which is jaggy like this, and my smooth RSI, where I've taken the same dynamic moving average function and applied it to RSI, so you can see a much smoother look at the RSI. And that helps me because I get to know whether things are overbought or oversold by looking at that, and it's not as jaggy. Average true range is the range of the bar you're looking at, including the gap, if there was any, before the bar started. So true range is high minus low plus the gap. And average true range is the average of true range over n number of bars. So I typically take it over 9. It's not a Fibonacci number, but it's a square. And the ATR, this is just, I ran some really quick measurements for you so you could see what the average true range is on a daily E-mini chart. So if you look back at time, you can make 50 points. On the weekly, you can make 100 points. On the 60-minute, now this is not right. It's not 10 points because I messed up in my calculation. I'll tell you honestly. And I didn't count the same number of days that were in the weekly. So anyway, the point is you can look at the ATR on all these charts and see that how many points are possible. We have to know how many points are possible, or we're not going to know how much we can make. So if I did 50 points a day, 50 times 50. Now, why is the 50? The 50 is how many dollars for a full point on the S&P. So a full point is worth $50. And I told you that a tick is worth $12.50. So you can figure out how many ticks are in a point. So if you could make 50 points a day, that'd be $2,500. If you could make 100 points in a week of 5 days, that's $1,000. If you could trade 6.5 hours a day times 10 points, you can make 32,000. 6.5 times 4 times 8. What on earth is that for? I forgot entirely what I was doing. Well, 6.5 hours per day times 12 days times 12 points times 3.5. I better skip this chart. I don't remember what I was doing. If you could catch all the maximum points from lows to highs, you could make that kind of money. So let's say you could make $500 a day. And I'm going to tell you right now, that's hard to make with one contract of the E-mini. So 500 times 5 days per week is $2,500 times 50 weeks, give yourself 2 weeks of vacation, is $125,000 a year. Now, that's doable, but what if we consider compounding? Now, I have the dubious honor of having sat in Ralph Vince's class many, many years ago, probably 35 years ago. And Ralph is a descendant of Leonardo da Vinci. So when they came over to Ellis Island, they changed his name from Da Vinci to Vince. So Ralph Vince is probably the most brilliant mathematician I've ever met. And he didn't even get a degree in mathematics. He quit high school in 11th grade. Actually, they kicked him out because he was too annoying. And then he sat in the library and read mathematics. That's how he learned math. So these are our ideal turning points. This is the average true range. And on the bottom, you can see the volume decreasing on that as we go to the right. So the perfect score for a day, here's the spreadsheet for a perfect score. Sell, buy, sell, buy, sell, buy. So we're going short, long, short, long, short, long. Okay. You can see by the end of 18 trades, we're up $10,000. Take 60% of that, we get $6,000. $6,000 a day times 200 days, approximately in a trading year, is $1.2 million. Okay, which one of those is true? Is it $1.2 million we're going to make, or are we going to make 100 and some thousand, whatever the other one was? This is trading one contract of the E-mini, so it shows you the potential. But what is realistic? I'm going to guess a third of that would be realistic. So a third of 1.2 million, you can still make $400,000 per year if you can pick the ideal turning points. So what if I get X dollars a day? $100 times 200 days is $20,000 a year. $200 a day times 200 days is $40,000 a year. 60,000, 500, there's your 100,000 roughly. And trading one contract, which is $12,000 margin, which is 800% profit. Nothing to sneeze at there, is there? Pardon me. So we're back to Ralph Vince. This is what I'm going to show you is, and I'm going to have to tell you a little bitty story with it, but this is basically originally from the works of Ralph Vince. So let's hypothetically trade 5 trades a day, 50% wins, 50% losses, but each win is 200 and each loss is 50. All right, so that's pretty ideal. And if we put it in my Ultimate F spreadsheet, you'll see here under unit equity, and that means trading 1, 1, 1, 1 all the time, never varying, just trading one contract. We go down the column, we get to 19,650. Okay, trading approximately 100 trades. Compounding it with my proprietary Ultimate F formula, you go from the same 12,000 down to 37,000. So instead of 19, we've almost doubled it and gone to 37,000 just by varying the number of contracts that we trade. So you see, we started out with 1, and then this horizontal line shows you where we skipped down to the bottom. 5, 5, 6, 6, 6, 7, 7, 7. It tells you, based on your profits, how many contracts you can trade. And it reduces the number of contracts when you're losing. And here you can see the blue line is 1, 1, 1, trading 1 all the time. We make almost 20 grand. And the green line shows us what would happen if we were trading my Ultimate F proprietary formula, and we make close to little over 37,000. Dramatic difference. Twice the profit. The idea is to let the market pay you for your additional contracts. You don't want to just be shoveling money into this all the time. You want the profits from your trading to feed into the system and let you trade more contracts. That's how you have lots of money. But whatever you do, don't add contracts until you have the profit to cover the adding of the contracts. You cut back when you're losing, but unlike Ralph's work, I never trade the full optimal F because the risk of ruin is 100%. At some point, you will lose all your money if you trade optimal F. I only use the ultimate F, which is a very conservative compounding scheme, but you saw it works. So here we are, a little bit about Ralph Bentz. He created this optimal F, and the problem is the risk of ruin is 100% at some point. And here's the book that I based it all on. This is the first book that he wrote. So as I started to say earlier, I have the dubious honor of having been the only person left in the class that he was teaching, where he was talking about how to do this optimal F and the math behind it. And the room just cleared out one at a time, a little more, and I was left sitting there. But it was fascinating to me. So I went up to him the next morning after I'd done some programming, and I said, "Excuse me, Mr. Bentz, may I ask you a question?" And he said, "Sure." And so remember, this is like 35 or 40 years ago. And I said, "I can't get this to work." And I showed him my laptop or whatever computer I had at the time. And I said, "This is what happens. It blows up." And he said, "Oh my gosh, you have found the error that I've been looking for 2 years. How did you do that?" So Ralph and I got to be friends, and we explored ways to change the formula so it didn't blow up. And I said, "I have what I want to do. May I call it Ultimate F?" And he said, "Sure, no problem. Go for it." So that's where my Ultimate F came from. It was originally based on his work, but it cleaned it up so we don't go broke. All right. Do we have any questions? Anybody? I'm done a few minutes early. There's no such thing as a stupid question. So ask whatever you want. And as I said, I'm writing this because I allowed people to vote and tell me what book they wanted me to write next, and this is the one. Sam Tennis is the author of Ask Mr. Easy Language. If you want to learn some easy language, it's a perfect book for that. And in about a year, we'll have Easy Language OOEL made easy. Only for people who have seen this webinar and contact me, anything you order before the end of this week, and today's Thursday, so I'll give you to Sunday, is 30% off, including SunnyBands, DMAH, any of my indicators, and even the Ultimate F spreadsheet, 30% off of that, and it's a little expensive because I think it's $20.60. I'm not sure. But if it's going to make you money, I charge you for it. Or if you want to wait, and you want to wait till the 6th of August, which is next week, then I'll give you 20% off. But if you order now, you get more off. So it even includes my consulting and mentoring time. If you want a free trial of any of these indicators, if you have multi-charts or TradeStation, you can email me or give me a call. There's my cell phone number. You can call me anytime, any day. Please observe Pacific Standard Time, because I'm in California. Thank you, Anna, for hosting the event. Thank you, audience, for your attendance. And here's my contact information. Now, let's go to the questions. Please sign me up for please sign me up for Sunday Side of the Street. You have to do that, dear. I can't sign you up from here because I don't know your email and your address and all that stuff. What about risk aversion? I'm not sure what you mean for that, risk aversion, but the Ultimate F spreadsheet certainly dampens the risk of trading that many contracts. And if you're trading my DMAH, it tells you all the signals. It tells you where to go long and short. So I guess if you're risk averse, you might want to trade from the long side only on a daily chart. Potential is so high, is it worth the that's for Norman. What's my target on Bitcoin? That's a good question. I don't have a target. One of the things I didn't show you, but it was in one of the other talks I did recently, was how I use Fibonacci lines to tell me what the targets are. So I put on Fibonacci retracement and extension lines on my charts, and that's exactly where I look for the turning points. Yes, the presentation is recorded, and Anna will make it available in the next day or two. Not able to sign up on your website. Don't know why. Go to moneymentor.com. And I don't know whether you want to sign up for membership or for the sunny side of the street, but you just go to moneymentor.com and scroll to, I wonder if I can bring up Money Mentor. That's a good question. Hang on just a second. We're going to bring this down to the other monitor. Can everybody see that? So if you want to see Sunny Side of the Street, you go to Books and Articles, Sunny Side of the Street. It brings up this form. You have to type yes to opt in and put in your information. And then you submit the request. And after you submit the request, you will answer with all capital letters. You have to answer with all capital letters. And this is kind of like my CAPTCHA. Presentation report. Oh, also the presentation is going to be on my website so that you can see it there. Not able to sign up on website. I'm new to trading. Oh, I love new to trading people. I love to teach people to trade. So give me a call. Nope, indicators do not work on Think or Swim. They only work on multi-charts and TradeStation at this point. Where does a person who just started investing in stocks like Apple, where does a person? I'm not sure what that means, but I love to teach people to trade. So if you're interested in trading stocks like Apple on a daily chart, give me a call. We'll talk about DMAH on a daily chart and also SunnyBands. And I use it for everything, any symbol, any time frame. To determine the stop size when trading the EFs. Well, I hate to tell you this, but I don't use stops. And most professional traders don't use stops. We have them in our mind, and what a good trading system will give you the stop by, and they will be the next entry. You'll reverse positions. I don't see where to get the free newsletter. You go to Money Mentor, click down to Sunny Side of the Street, and there's the free newsletter. All you have to do is sign up for it. And Mindy's going to give me a call. That's excellent. After I finish this, you can give me a call. That'd be great. Are there any more questions? Because otherwise, I'm done. Where's the chat? Let's see if there's anybody on chat. Let's go back to Money Mentor. There's the front page. So I guess that's it, Anna. I don't see anybody wants to ask me any more questions. So I thank you very much for the opportunity. I thank you, audience, for attending. And give me a call, because I tell people they can call me anytime just to talk, and they don't do it. So either you don't like my work or you don't have any questions. All right, guys. Thanks a lot. Bye-bye.
Thank you so much, Sunny.